I think we can start. And for those who have just joined, let me just turn on camera briefly. So my name's Peter Chege. I work with AIB Access Africa. So today I want us to go through making your first trade for those who have never traded, and for those who are trading, how to interpret the order entry screen and also do smart investing. Then at the end, we'll also go through the boards trading. So allow me to turn off the camera because of latency. So let's just go through a brief recap of what we have done. Why you need to trade and invest. First of all, when you're investing, you're helping your money grow over time. When you buy shares at NSE, let's say you buy Safaricom at 28, you would expect maybe to sell Safaricom at around 40, 50, if it goes to that level. Or if you're not able to sell that price, Safaricom should be able to give you dividend. So that's how you grow your money. Even if the price is not growing, then the share should also be giving dividend. Then it also protects you against inflation. Then these days, I think even ZD, the new platform, allows you to buy from one share. What that means, the minimum amount you need to get into NSE is the price of the share you want to buy times 1. So if you have to ask me, how much do I need to get into NSE? I would just respond simply. Every day, I think it is the cheapest. It's let's give it 1.3 shillings. You just multiply by 1. So you only need around 4 shillings because of stamp duty. Stamp duty is what it's into cost. That's what you need to start at NSE. What if you are buying the most expensive, which is gold, Absa Gold, GLD? Then you need 6,500 inclusive of the cost, depending on the price you are buying at. So for shares, it allows you to enter at a lower price and also lower amount. However, remember you're getting into NSE to make money. Prices take time to move. Dividends are based on the amount you put in. For those who are joining, we are just starting. It's just a recap of what we have done before. So even if you are starting small, if you are looking to make gains, you need some substantial amount. Not a lot. You can just be depositing what you have. If you have 100, put it, buy the shares that you want. If you have 1,000, put that in. If you have 10,000, if you have more than that, then as I said in the introduction, you can even diversify across many stocks. We are gifted differently. What I can put in is not what somebody else can put in. So if I'm buying 20 stocks, it's not the same number of shares another person would be able to buy. If you're putting in 100 and you try to buy like 10 stocks, you are spreading a small amount into so many stocks, reducing your earnings. If you have like 1 million, that one you can even spread across nearly all stocks and you still make your gains, because remember, you want to maximize on the market. We have seen last week market dropping, others going up. In such case, you want to have as many stocks as you can to take advantage. But again, it all depends on an individual purpose on why you are coming to NSE. So again, NSE allows you to start small, even with 1 share. But remember, that 1 share cannot help you unless it is GLD. GLD, yes, you can make money. Yeah, it's around 6,000. Assuming you are able to buy at around 5 or 4,000, then you sell at 6,000. That is 2,000 you have made from 1 share of GLD. But come and buy 1 share of Safaricom. It's 28. Even if it goes to 40, you're only making a difference of around 20 shillings, which will be eaten by commissions. Also, if it is dividend, actually that dividend, if you are paid and it is paid through bank, we'll see why you may need to have different mode of payment depending on the dividend amount you are receiving. If you are receiving less than 200 in your bank, remember your registrar says that dividend is EFT. EFT is charged receiving and also sending. Registrar removes 50. Your bank charges to receive, maybe EFT they are charging you 150. Equity they charge 150. So if you add that, is already 200 deducted from your dividend. If it is 200, then you receive 0. If it is less than that, it means then the bank is creating a debit in your account. So for small amount of shares, even if, as I said, we are not all gifted same way. When you come to dividend, if it is less amount, go for M-Pesa. If it is a lot of money, go to the bank. Banks are cheaper if it is higher amount, and they're expensive if it is lower amount. M-Pesa on the other side, it is cheap for small amount, but expensive for higher amount. So again, even if you're starting small, always look at what is your goal. If you're looking to make money at NSE, grow that one share to at least each share 1,000. If you're looking for capital gains. If you're not looking for capital gains, it's purely dividend, then you look at the amount of dividend paid by each share. With BAT, you can have 100 shares. Already that is 6,000 with just 100 shares. What about Safaricom and the rest? The ones which are even giving 0.5, 0.2, 0.1. You need a lot of shares. So if you're looking for dividend, it means you have to grow your number of shares. Even if you're starting small, you need a lot of shares. So for dividend, it all depends on the number of shares. In terms of capital gains, again, it depends on the number of shares and the price movement. Again, we take an example of BAT. It can do even 50 shillings in a day difference. With just 100 shares, again, you can make your own 5,000. What about these small shares, Safaricom and the rest, which just do with even a 0.5, 1 shilling, 2 shilling difference? It means you need a lot of shares to make the same amount you'd make with BAT. Even if you can start with small amount, you need to build that small number of shares to substantial quantity that can give you returns. Then starting early will help you in compounding. The way compounding works, you invest at NSE. You buy dividend stocks. You receive those dividends. Instead of using to pay bills, you return that money back, reinvest, buy more shares that are giving you dividends. So you're using your dividend to buy another dividend. And remember, dividend is based on the total number of shares you have. So the more the number of shares, the higher the dividend. So you're using your dividend to reinvest back. You are compounding your returns. You don't need even to sell. But when prices are way high that you feel they are not justified, and the next thing that would happen is a drop, then that time you can take capital gains. Don't withdraw. Again, wait for the market to go down, buy back. Or you move to another stock, wait for the main one to come down, sell the new stock at a profit, go back to your dividend stock. Nothing stops you from selling. Even if you're in long term, like a good example, BAT one time, I think 2014, it ever went to around 1,000 per share. I wish NSE can return that data on stockanalysis.com. You identify some of these opportunities. A share moving from 400 all the way to 1,000. I don't think even me, I would want to hold it at 1,000. I would sell immediately. Wait for it to drop, buy back. Remember, you're selling at a profit. Use that profit to buy more shares, which are also giving you dividend. Then it also helps you creating an extra income. Remember, dividends are free money. So when you receive dividends, you have not sold your shares. You have received free cash without selling. You can use that income now to rebuild your wealth by reinvesting. However, remember, you're also investing for your own benefit. You can use small portion maybe to settle bills, maybe for entertainment, but much of it return back. Then it also reduces the chances of costly beginner mistakes. We have seen people come in NSE, you buy shares, market just drops slightly, like what has happened in the last 3 weeks. We all panic, we want to sell. Yet we have not understood what is dropping the market. Because once you understand what is dropping the market, then you not make some of those mistakes where you are selling because everybody is selling. But remember, you all bought at different prices. Somebody is selling because they are taking profits and they are justified. If it is a pension fund, remember they have to credit the people who have contributed their interest. So if they are selling to take those profit and credit, and me on this side, I want to sell at a loss because the market is dropping, then both of us here, one is making a mistake, a costly mistake at NSE, while the other one is taking advantage. Then it also helps you build financial confidence and independence. So the key here is always start early, but there is no defined age of starting. Even if you are going to retirement, you can start that time. Just invest consistently, learn the basics, understand where you make money from. Shares only two ways as of the current settings: dividends and price movement. Dividends and price movement. And for price movement, you have to sell to make that actual profit. Otherwise, it will be paper profit. Paper profit is where you see it on the system, but you have never sold. When the market goes down, remember that full profit is wound up. So let's start. For those who are beginners, I'll just go through a brief introduction of shares. Then we get into the actual trading. For those who are asking what time I'm starting, we have already started. You can hear me? Just confirm. Because now I'm about to start, and I don't want you to miss anything. Okay, I think that's fine. We can continue. Moses, confirm you can hear me? I think we can start. So today I'm assuming, let's assume all of us don't know how to place the trade. So where do you start? For you to start trading, you need to know the basics. First of all, what am I buying? Number two, how am I buying those shares? And with who? And where are they held? Once you understand those 4 steps, you are good to get into the market and you will be comfortable to execute any trade. As I said, in NSE, you can start with a minimum of 1 share. Yes, quantity 1 share, price, execute. But then you need to understand, how does this 1 share help me? And again, you don't need a lot of capital. So shares, when you buy shares at NSE, you're actually becoming an owner of that company, a part owner. Remember, it's not just you. We are many of us who have bought shares. As I gave example last week on Saturday, it's like 1 cow which is owned by the whole community. Each person have contributed. It's 1 cow, but each owns part of that cow. If it produces milk, we share that milk. If we sell, we share that profit. So it is the same thing. Here, instead of a cow, it's a company. If it makes profit, it shares that profit with you in form of dividend. When you sell your own unit at a high price, you get capital gains. So shares is ownership of a company. You're actually becoming a part owner of that company. If it performs well, you perform with it. If it performs poorly, remember it affects your investment. However, in NSE, we also have other products that trade in. We have ETFs. ETFs are exchange traded funds. It's grouped number of shares. They are grouped into one you buy as 1 unit. NSE, we only have one SMWF that packages stocks. It actually packages stocks from international market, SMWF. Then we have GLD, which tracks the price of gold. Those are the only ETFs in the market where you own an asset, but you don't own it physically. So when you buy GLD, you actually own that gold, but not physically. You don't have it physically with you. It is stored somewhere. You own a piece of it, another person a piece of it, like that. And again, it's supposed to track the price of the gold, but in NSE it is the opposite. The price is dictated by demand and supply, even for shares. However, shares are different because even company performance will also affect demand and supply, which affect the performance. So when you buy shares, when you buy ETS, you are owning a piece of that. Whatever you are buying, we call them assets. So assets could be ownership of a company, which is shares, or ownership of a commodity like GLD, that is gold. And you can buy from as little as one share. Hopefully, in near future, we might see fractional trading. Hopefully, that's a direction we are headed. With the introduction of USD denominated assets, you can buy other assets in the NSE, but not in Kenya shillings, in USD. It is work in progress. Hopefully, the brokers can integrate in their platform so that you're able to buy. Once that is done, you'll be able to invest in NSE in USD instead of Kenya shillings. So you have shares trading in Kenya shillings. You also have other assets which trade now in USD. That is US dollar. Now with the one share trading, it has allowed everybody to come in the market. So it makes it accessible to everyone. And you can start small, grow over time. So we will go through briefly on order entry screen. Then we go to the platform. So when you're buying shares, you need access to the trading. Who provides that trading platform? It is the broker. So the broker connects you with NSE. NSE gives broker access to the market. Broker gives client the trading functionalities. It could be either online or mobile app, or where you submit your order physically or via email. The two have difference. Where you are submitting physically or via email, you don't have flexibility of choosing the price. It is the broker who chooses the price for you. Unless you go there and ask which price the shares are trading at, they'll give you the price, then you choose. When you are trading on digital platform, you actually have access to prices and all orders in the market. So you're able to make decisions based on what you can see in the market. So the first thing is setting the quantity. Quantity is the number of shares. The number of shares you want to buy or sell. If I want to buy 100 shares, that's what I put as quantity. Another person maybe they want to buy 1 share. That's what they put. And it is based on your budget and risk level. Remember, everybody have their own risk level. There's somebody who come to NSE, put 10,000, and they are worried that 10,000 can be wiped out. Then there's somebody who come at NSE, they just put 10,000, wait for the market to go up, they put another 10,000. For them, they are not more interested in a portfolio performance, but the returns they are getting. While the person who is just putting maybe 10,000 and they are worried, they will start looking at the prices. When it turns red, they are quick to sell. So it all depends even on risk level, because the number of shares you put in there will depend on your risk appetite. If I put 10,000, I can decide to put the 10,000 in Barclays or ABSA shares. While somebody else will come and split that 10,000 into different stocks, so that if one is affected, they're able to regain back with another one as they wait for the price to move. That means the risk appetite between us two is different. Me, I'm able to risk my 10,000 on BAT. I'm able to risk my 10,000 on Safaricom because there is an opportunity I can see. While somebody else will come and say, if I put this 10,000 in just BAT, what if price goes down? For them, they are not looking at returns from dividend. They are looking from capital gains. So the number of shares, again, they are dictated by the budget, the amount you are putting in, because that's what it dictates. You just need to divide the amount you are putting in with the price, you get the number of shares you can buy. And that budget, it is dictated by the risk appetite. And again, your financial capability. Because again, if you're putting, let's say 1,000 every month, ideally you wouldn't buy all the shares in the market. It means you have to confine yourself to maybe 1 share or 2 maximum. Because again, when you spread that 1,000 to so many stocks, even returns will be low. So if you're putting 1,000, you just choose the shares that you want within that range. With 1,000, if you're going for GLD, you won't buy because GLD is not trading fractional stocks. If you're going for BAT, you'd buy roughly maybe 1 or 2 stocks, which then gives you a dividend of what? 60 times 2 shares, around 120. You make a mistake of giving bank as a mode of dividend payment. The bank swallows everything and leaves you with a charge that you're supposed to credit again. So again, budget, risk level, and also what you are getting into NSE. If you're getting in to get dividend, the number of shares matter and the dividend amount. As I've said, if it is bank, it's good when you're receiving high when the dividend is high. If it is a raw dividend, then you'd better go to M-Pesa because M-Pesa doesn't have any charge. Then you need also, before you even place that order, you decide which share you are buying, number of shares, and the price. Where do you get all this? Let's start with the number of shares. Number of shares, we have said, amount you are putting in, divided by the price. Which share to buy? You have the list of the stocks on the digital platform. You have research from the brokers. You have your own research. There are so many sites you can research, even NSE. There is stock analysis, they tradeview.com. Once you do your analysis, you have known which stock. You have known the amount. It's just the number of shares. You're just dividing the amount by the price. You get the number of shares. And from there, you just log into the digital platform. You have your price and you have the number of shares. You just put in the order, execute. But again, price is the most important. If market is going down, you don't want to buy at a high price. Otherwise, at some point, you realize your portfolio is in loss. You want to use the lowest price possible based on the direction the market is moving and the orders on the market depth. We are coming that on the online portal, so don't worry. And the orders on the market depth. On ZD, it is order book. You don't want to place your order lower than where the support is. Support is where quantity, the bid quantity is the highest. If you place, then you need to put a GTD for a longer period, and also you understand how that quantity is moving. If every day the highest quantity keeps on changing, then you know that somebody who is just placing an order for just one day. So we'll come to that. Let's first go through the order types. I'll go through the order types, then we come to the screen. I explained on the app and also on the portal. So there are 2 types of orders you can put in the market. There is a market order and there is the limit. Market order is where an order executes instantly at the current price. You are saying just go to the market, pick any price that is available. I'm ready to pay the cost. First of all, it is very fast because it goes and checks, is there supply? Just pick the shares that are available. But then you may be buying at a higher price. And if your quantity is big, then there is the chances of spillage. Spillage is where you clear prices within the screen. Then we have the limit. Limit order is where you set a specific price. Your order is pegged on that price. It can't execute at any other price. It's either the current price in the market, or if you put the prices on the buy side, same as the people who are buying, you have to wait for the prices to come down. So you are limiting your order. That's why it's called limit. You are limiting it to a certain price. The only difference between the two, market highs, there are high chances of execution because as long as there is supply, it will go through. Limit, you have the control of the prices. It is you who is saying, I want my order at this price. We are coming to that on the online portal and also on the app. Then in terms of price selection, you use the market depth. Before we go to this, let's go to online portal. Let me just log in. So hopefully you're trading with a broker who have the same platform. Let me just log in. I log into AIB Access online portal. We use it to go through the order entry screen. Then you come to market depth. I'm just connecting the platform. And remember, trading, the actual trading is weekdays, Monday to Friday, working hours. So even if I place the order right now, it won't execute. But it is the same process we are supposed to use when placing the order on the live platform. Connect the platform. So again, if you're using the same platform that I will show you, the settings are the same. I think it's only ZD which lacks one functionality, that is intraday. The rest, I believe, the platforms are the same. So let me just stop sharing this. And if you have any question, you put on the chat. I'm just connecting my VPN. But you don't need to connect VPN. You can access the platform from wherever you are. It's a bit slow. Let it connect. As it connects, I can be picking a question. There's a question on preference shares. So, I think for preference shares, I've seen it with KPLC, where it has ordinary shares and also preference shares. What that means is, if a dividend is paid, the people with preference shares, they are paid first. That's the only difference. Otherwise, in terms of share price is the same, but they trade differently. That's why you find on the AIB digital platform, we have disabled the two preference shares. There is KPLC 3 and 4. Those ones, they don't trade. We have not enabled on our digital platform for one reason. You may not find people selling to you. That is the downside. Let me share. I think I need to share full screen so that you can see the order entry screen. Let me share the entire screen. Hopefully you can see that screen. So this is the online portal. Right now the market is closed. That's why market depth doesn't have any data. If I click on the B, it's for buy, S is for sell. For those who are just new, let me just go through this screen. We have the watch list where we have the list of the shares that are in the market with the different settings. So you can see that's price, that's quantity, bid. Then at the end, there is a screen we will come through later called foreign buy and foreign sales and also turnover. So you're able to get that on the online portal. On the app, it only have a few data. It only have the last price and the market depth. It doesn't have the other details. In terms of graph, on the app, it has candlestick instead of linear graph. In NSE, you need the linear graph. Even in international markets, when you are buying shares, you need a linear graph. For candlesticks, you may need for Forex and maybe CFDs. For shares, it's just a straight line graph. If I put like 1 month, the graph should change. This is what I mean with the straight line graph. You're able to tell the direction the market is headed. So for you to buy, you either click on the B within the watch list or B on the market depth. I'll use the market depth to open this screen. This is the screen I'm explaining. This is where we are. Limit and market. I'll come to market to limit. So we start with the market. Market is where you are not putting in price. If I put quantity here, 100, and I submit, it will pick the current price. If the current price is, let's say, 28, that's what it will execute at. If it is 29.90, that's what it will execute at. What if I put 1,000 shares, and on the sell side, we have like 10 shares at 25, another 10 at 28, and another 10 at 29. It means I'll clear all those prices. That is the downside of the market order. Market order, pick for me at the current price. If you're not able to fill at the first price, go to the second one, go to the third one until you fill my order. If it is not fully filled, cancel the balance. What about the limit? I'm able to put the price here. If I put 25, my order is limited to that price. It can't execute at any other price. If market continues to go up, I will need to adjust my order either upward, or if the order there, if it doesn't execute that day, it will depend now on validity. If it is a day order, it will expire the same day. If it is GTD, it will be refreshed by the broker the following day. We'll come to the other settings. So limit is where you are putting a price. Market is where you are not quoting any price, but you are picking at any available price. And I'll say that the downside of that, you can clear other prices. Let me I need to put in a screen. Let me put in the screen for order book or market depth that will help us understand the different prices and how they may affect you. Let me just pick that screen. Let me just use BAT as an example. I'm sharing the screen. I'm just adding these on the market depth. Let me create a new slide and paste. Because that way you'll be able to understand. Is up. I'm sharing the screen. And if you have any question, you put on the chat. Then you come to the mobile app because the screens are different. Let me share. Where is this? Let me share my screen. So again, we are on market order versus limit. Let's go to this screen. If I'm putting a limit, let's say I put my price at 560 and the current selling price is 564. I have to wait for the market to come to 560. That is the limit order where I'm putting the price as 560. What if I put a market order and I submit? There is already available supply at 564. It will execute at 564. Now, assuming I'd put an order of 10,000, we already have 999 as the quantity, 999, around 1,000. It means I'll get the 1,000. The 9,000 balance goes to the next price. This is the market order. It goes to the next, checks. Is there available quantity that can fit in my order? Already I have 9,700. It will clear the 9,000. So my order will execute at two prices, 564, 565. What if I put 100,000? It will clear everything on that screen on the sell side all the way to the last quantity. The balance, if the order is not able to fill, it is cancelled. That is the risky nature of market orders. You clear everything, then you find you have bought even at a higher price. But for limit order, it's you who is putting a price. If you put 562, you have to wait for the market to come down to that price. If I put 564 to buy just 1,000, I'll pick the 999. Then the remaining one share will be moved to the bid side. I'll be now the top bid with my one share. It won't go to 565. That's why when you're placing orders either on ZD or even on any brokerage app, never use market orders. Market orders unless you need to sell immediately. Like when shares are speeding the prices up, like what has been happening with Uchumi, and you want to sell immediately, that time you can submit a market order. But only if you have made profit. That's the only time you can use market order, so that you submit, you get, or if it doesn't get, it cancels. So we come now to price selection and market depth, because this is where most of us make mistakes. First of all, the price at NSE is determined by demand and supply. It's me selling and you buying. It's us who determine the price. Let's go to this screen. If an order have to execute, either there's an order that buys at 564 because there is already supply, or there is an order that sells at 563 because there is somebody who is willing to buy at that price, to sell at to buy at that price. So we either have two prices, 563 or 564. Somebody willing to buy at 564, it will execute immediately because there are shares on offer. Or somebody willing to sell at 563 because there is somebody willing to buy at that price. You may ask a question, then what if there is nobody putting to buy at 564 and there is nobody willing to sell at 563? So the market then stays like that for the whole day. Remember, there are people who are submitting market orders. Market orders for sale, they will come and hit 563. Market orders for buy, they will hit at 564. There are people who can see the prices and they want to buy shares immediately. They will pick 564 to buy. There are those who will see 563. They want to sell immediately. They will put 563. Remember, broker platform, and I believe even ZD, they populate the price for you when you click buy. What does that mean? If you don't change that price, it means you hit the exact current price. There is also fund managers, pensions, pension funds, and also foreigners. For them, they have a predetermined price. If they say I want to buy at 563, the person who is selling, they will need somebody who is selling at the same price, 563. What they usually do, and this is off the market, it is the traders who talk among themselves. One will say, I have shares to buy at 563. Do you have a client who is willing to sell at that price? If they say that order will execute behind the scenes, it will first clear what you can see 563, then the balance will clear with that price, because this market is first in, first out. It is protected unless they put specific flags. And the flags, if you saw on the order screen, there are some settings you as a client you don't have. So if you match, that order comes and closes, but the price have to be current. Market, like the way the screen is, it can't execute at 560 because there is already 563 at the top. It starts at the highest price for the bid, and the offer side, it is the lowest. Now 564 going upward, 563 going downward. So I hope now you understand in terms of price execution. Price, you have to match buy price if you're a seller, or as a seller you have to match the buy side. That's when the execution will go through. So NSE prices purely supply and demand. Then market depth will show the buy orders versus sell orders. We have it here. The bid side, people who are buying. Offer side, people who are selling. On the app, we'll come to it. It has the bid and ask. It's just the namings which are different. On the portal, offer. On the app, it is ask for the sell side. That is demand, supply. Demand is bid, people who are buying. Offer, ask, people who are selling, supply. Then we have what moves the prices. If you have more buyers, price will go up. What does that mean? If let's say we have so many people buying, you clear 999, you are still competing for the price, you clear 565, the quantity that is there. More people still willing to buy, you clear 567. It means now the prices starts to go up. The same for selling side. If there are more sellers than the buyers, it means they will push the prices down. Again, you want to buy to sell, you want to sell immediately 563, the price goes to 562. Again, another group comes and clears 562. Again, the prices keeps on dropping. But remember, there are also orders on the supply side which are taking over the cleared price. Like 563, if you clear, now you find there are people who are willing even to sell more on that price, but there are no people willing to buy at 563, so they will be queued. And that's how you find the market dropping. Just pure demand supply. More buyers, meaning more demand, prices go up. More sellers, supply is high, prices likely to go down. But remember, the market is usually protected by 10%. There is the lowest it can go and the highest it can go in a day, unless it is open day. So always look at the order levels before placing your trade. What does that mean? Quantities on this screen. Let's say I want to buy. I have 3 chances. One, the first chance is where I get the shares immediately. There is already a price of 564, 565. I can decide to buy at 564, maybe 500. What if I need 10,000? I might decide, because I need my shares immediately, let me first pick the ones at 564. Then the balance, I come and pick from 565. That means I have bought immediately. The other chance is where, yes, I may not get immediately, but I'm willing to wait. I can put 563. Quantity is 1,000. If I add my 10,000, it comes to 11,000. There are chances. There are people who come and sell at that price, clear the 1,000 which was ahead of me, and also I managed to buy at the same price. However, if you look at that screen, at the bottom there is 3,700. That is where support is usually where demand is the highest. I can decide if I want to buy at a lower price, maybe I can wait for 1 week. So I put an order as GTD with a lower price, give it that duration. Remember, brokers, they usually refresh these orders the following day. You don't need to, if it is a GTD, you don't need to come and place again. They'll keep on submitting, they try the order. At one point, the market may hit the lowest price and hit your price. If you look at the graph itself, it can tell you there's somebody, this is the same day, it is one day. The day I took this screenshot, there's somebody who was able to buy at 550. It is the same day you are seeing this order book. Yes, the prices you can see on the left side in the graph, it's the same day I took this screenshot. Meaning, there is somebody who had put a lowest price, a GTD of 1 week. Within that day, somebody came and made mistake, sold their shares at market, cleared even the lowest price. Then the market went up back to where it was around 560s. Notice the same day there is somebody who bought at the highest price, 630. And on the screen that is split into two, you can even see the 630. It is there down on the supply side. Meaning what? There is somebody who lost the same day by buying at a high price, and there is somebody who made profits by buying at a lower price. By looking at market depth, which is also order book on ZD, you can easily get lower prices. Like now, the way the screen is, if it's Peter buying shares, I would not even try and put at 564, 563, 562, 561. I'll be gambling between 560 and 559. Why? 1,000 at the top, it can easily be cleared. It's just 2 orders. It can either easily be cleared, or one or the 2 people there, they can decide to cancel their order. Meaning, they have removed their order. 183 is just a small quantity. 251 is a small quantity. What about 3,000? If I multiply by 560, that's around, it will come to around 1. It's more than 1 million. So I'm ready to gamble either with 560 or 559. I can decide, let me give my order for 1 week. Maybe even these 34 people, they just put a day order. It will expire tomorrow. Tomorrow when market opens, there is a chance of my order being hit at a lower price. And that's why you find this person who bought at 550 was able to execute the trade by just looking at the quantities. Let's go to the sell side. We have 9,000. That's where resistance is. So on the supply side, resistance is where the price is prevented from going above by having a very huge quantity. Support is on bid side, where you have the price quantity which prevents the price from dropping. You have a huge quantity. So on the supply side, you have 9,000. If I'm selling, I will only determine, do I need the money today? If I need money today, I cannot even gamble with a 565 because I won't be able to sell that day. There is a very huge quantity. I have to wait for 9,000 to clear. So I would be gambling with 999, 564 price. What if I'm willing to wait? These are just 2 orders, 9,000. They can decide to cancel their order. What does that mean? I have chances of even hitting high prices. And it is the same scenario that allowed somebody to sell at a high price and another one to sell at a low price. And also for buying side, the same thing. So if you're able to interpret this screen, you're able to even get lower prices with GTD. So you look at the order levels before placing the trades. Identify where there is strong demand if you are buying. Again, we go back to the same screen. Strong demand. If you look at this screen, we start with 1,183, 251. We have 3,000. The highest quantity on that screen is 3,000. That's where there is strong support, strong demand. So I would put my order either at 560. Again, GTD 1 week. These are 4 people. There are likely chances some of them will cancel their order. Or tomorrow when the broker is submitting, maybe even their broker may be made. And that's why I would even gamble with a lower price, because 3,000, it's not a lot if you are giving 1 week. But if you are giving a day or 2 days, chances of getting that trade may be minimal. So the reason why you are checking on the strong demand is to avoid overpaying. And also when you are selling, you don't want to sell at a very low price. Look again. If you are selling 9,000, that's like 2 people. They can cancel. 1,000 can clear immediately. Then why would I want to sell at 563, 564, 565? I can put my sale order at a higher price. And that's why you find same day somebody is able to hit high prices to sell and another one is selling at a low price, because they didn't look at the screen. And also using market orders. Remember, market orders clears anything on the way. You hit low prices. Somebody have limited their sale order at 630 and they just leave it and forget about it. If you are buying the same thing, if you are buying with market order, you can easily hit high prices. Remember, broker will also add commissions. So on your portfolio valuation, you find you're on a very huge negative. The same day, somebody is able to buy at a low price because they limited their price to a certain level using limit orders. So limit orders goes together with market depth, which is also order book, because you need to identify a low price when you're buying. If you're selling, you identify high price. And all that depends on where there is strong demand for somebody who is buying and strong supply for somebody who is selling. So always use a market depth. When you're placing order, make sure it is the day, working day. If you are placing over the weekend, unless you are putting a very low price and you are very sure that price cannot be hit on Monday when market opens. Otherwise, always look at market depth when market is open. And as I've said before, we have different trading sessions. We have pre-open, which is between 9 and 9:30. That time you are allowed to place orders within a price as long as they're within 10%. You can even put the highest selling price as a buyer. But remember, when market opens, market have to play it's called equilibrium, where the closing price of the previous day is usually the opening price of the following day. All orders above that price, the market have to find the best price for you. It can't execute at the highest price. So during pre-open, you find prices mixed in the screen. But between 9:30 and 11, that time, market orders, they'll come and hit and clear the noise that is there. It is usually called the noise because prices are always mixed. Then from 11, that's when you find even foreigners coming in. That time, the market usually stabilizes. If you look at this graph, it can tell you. In morning, low prices, high prices. But around midday, prices stabilize. Because that time, the market have already identified the price for that day. Now it is forces of demand and supply. Then about time close, around 30 minutes to close. Remember that time there are people who cancel their orders because they are not been able to buy or sell. They start canceling. They open up the gaps. That time you can also hit high prices and low prices. So if you want to place your order, always target the price when the market is stable. However, we have time differences within us. There are people who are working outside the country. There are those who are also in working environment where you are not able to log in. Nothing stops you from getting into the market as long as you can see the prices. Make sure you are not buying at high prices at all. That's why there is that graph. If you put a 1 month, I think I had shown you, I will come back to the portal, you can see the direction the market is taking. If prices are going down, there's no need of buying at high prices. If market is going up, there's no need of putting your order at low price, knowing very well it will not execute. So that is the purpose of market depth. Hopefully, we can do a trade when market is open. If I'm not able to do live training for a trade, I will record. So again, within the same screen, that is this, you need to understand bids and offer or ask. So bids, these are people who are buying, and ask or offer are people who are selling. Bid price is usually the highest price the buyers are willing to pay. So if you go back to this screen, 563 is the current bid price, the highest price the people who are buying are willing to pay. Again, bid price, the highest price a buyer is willing to pay. Then the rest, they come queuing behind that price. As you can see, 562, 561, 560. For an execution to happen, a sale order have to hit 563 first. It can't hit 562. Even if you try to sell right now and you put 560, there are higher prices. So it will hit from 563. Now, depending on the quantity, going down. Then we have the ask price or offer price. It is the lowest price the sellers are willing to accept. Again, from this screen, 564 is the lowest price somebody is willing to sell their shares at. And for an execution to happen, there somebody must be willing to buy at that price. So offer price, ask price, the current lowest selling price. Bid price, it's the highest buying price, the highest price that people are willing to buy at. Now there have to be negotiation in between the bid and offer or ask for an execution to happen. Remember, when you're pricing the order, you can see the prices. So if you are quick to sell, you sell at 563, it executes. If you are quick to buy, you put at 564, it executes. There is somebody who is willing to buy at market quickly, it will execute. So that's where now executions come in. Now the difference between the bid price and ask price is called spread. That is 564 minus 563. The difference is 1 shilling. That is the spread for BAT. Why is that important? The narrower the spread, the easier is it for you to buy at a lower cost. The wider the spread, it means either you are buying at a high price or you are selling at a lower price. So it also dictates the losses. But again, the losses in terms of price difference, in terms of execution, it's not your portfolio. Your portfolio could be in a profit, but remember, if the difference between the prices is too wide, it means either somebody is paying too expensive to buy that share, or the somebody who is selling, if they sell at current bid, then they are selling at a lower price. Again, the spreads also dictate the liquidity. How easy is it for you to buy and sell that stock? If it is wide, then chances of you selling are very limited, unless you go with market order. Even buying, if it is narrow, then it means it is easier to buy and sell that stock. Like BAT, it's very easy to buy and sell. You already have 563, you have 564. You can easily buy at 564. There is somebody who can easily sell at 563. But again, in terms of gains, so for any execution, if you are buying, you have to match the ask price. If you are selling, you have to match bid price. That is for execution to happen. But again, as a seller or a buyer, you want to take advantage of the price, and that's where now GTD comes in. Then we come to order validity. We have seen this and this, that is market depth and price selection using market depth and order book, and also bids and ask price. Let's come to order validity. We come back again to online portal. We go through the order validity. There are settings that you see. On the app, you will see day and GTD. On the portal, you see day, GTD, IOC, FOK. I will come to those. Let me first explain. So order validity determines how long your order stays active if it has not been executed. So the number of days your order stays there in this screen. If let's say I'm buying, I put 561 and I put a day, my order will stay for that day at 561. If prices comes to 561, it will execute it. If it doesn't come, then within that day, it is cancelled. So that's what means order staying active. It is in the market waiting for the prices to come down if you are buying. So a day order is only valid for that day. It will expire if it is not executed. So when the brokers close their system, your order is cancelled. GTD is good till date. Again, GTD, good till date. Your order stays active for the number of days you put on the calendar. Either it executes, or if the price goes way high or above 10%, your order is cancelled by the system, or you come and cancel. So GTD, order may stay for those days. It either executes in between, you come and cancel, or the system cancels if the order price is outside the 10% rule. So that's what GTD means. Your order is active, is valid in NSE for those number of days. IOC, immediate or cancel. What that means, when I submit my order, go and pick immediately. If you're not able to pick any shares, cancel that order. Or if you're able to pick portion, pick it, but the balance, cancel. Let's go to this screen. Let's say I'm putting IOC and I put a price of 564. I'll put 1,000. I'm saying immediately pick the 1,000 or whatever is available. If you're not able to fill the order, cancel the balance. So I'll pick 999, but the balance of one share is cancelled because it's not able to fill. Remember, it can't go to the next price because I've already limited to a price of 564. Immediate or cancel. What if I put 562? I'm buying like others at 562, maybe 1,000 shares. And I'm saying go and pick immediately 1,000. Already the price is 564. That order will not execute, so it will be cancelled immediately. That's what IOC means. Immediate or cancel. Then there is FOK, fill or kill. These are on the online portals. They are not on the app. And also on ZD, you won't find these. So fill or kill means fill my order immediately, full quantity. If it is 1,000, get 1,000. If you're not able to get that 1,000, cancel my order. We go to these. Again, I've put 564, get me 1,000. There is already 999. It won't pick because I'm saying feed it. Get me exact 1,000. If you're not able to get that 1,000, cancel my order. And this one now you find, like I said when we are starting, fund managers and also pension who trade through brokers, they use some of these settings. Because they say go and pick me exact. If you're not able to pick, cancel. They also have somebody else who is selling the same quantity. They will execute immediately because there is somebody who is willing to give the exact quantity under 564. It's not market manipulation. It's the way the systems are set at NSE. That is there to allow, it's called cross-book trade, where me and maybe another person, we want to trade amongst ourselves. We exchange the shares, they pay me. That is allowed by regulation. And that's where fill or kill with additional details like disclosed quantity. Those ones you won't find on the broker platform. You find them on NSE trading platform. So the idea of using validity here, first of all, is to control timing. You don't want to buy shares when prices are dropping, like BAT here. There is no point of me putting at 564, yet the graph, if I put 1 month, it's showing there is a prices are going down. I can even take advantage of lower prices. Then it also helps you set execution conditions. Let's go to the online portal. I show you now those settings. We'll come to the app. Let me first show you on the portal. Let me share entire screen. Hopefully I'm still logged in. Yes. Let me share the entire screen. We go to the online portal. Again, from the same order entry. Let's first go to the graph. We have ABSA. Direction is down. You can see the graph itself. It is, let me see if I can zoom the graph. You can see the graph is going down. It is at 27. Why would I want to buy at 27 when the graph can show me the price can still go down? That's where GTD comes in. So when I'm placing my order here, buy, I have validity here. If I put day, my order is only valid for that day. If I put GTD, I'm able to put date on this calendar. Let's say 1 week, maybe even up to that first. So what I'm saying, I've put to buy ABSA, maybe 1,000 shares. I'm using limit. If you use GTD with market, you actually disadvantage. It won't allow you because market, remember we are saying go and pick me whatever is there. If you're not able to pick, cancel. So your order is only valid for that session you are submitting. Limit, you're able to put GTD here because it is you who is putting a price. Let's say you are putting a price, let's say 25. I wish the order book had some figures would have shown you how to select that price. Then GTD, I can say, because the graph is showing me the market is going down, I would expect this price maybe to come down by, let me go to April, by maybe Thursday, because Friday is a holiday. Trigger price, just ignore it. These are some of the settings that have not been enabled by NSE, but they allow you to do some other stuff, like if a price reaches a certain price, just trigger my order. But it's not allowed on the portal and also on the app. So GTD, what I'm saying, just go and submit my order. Yes, the price is around 27, but there are chances that price will come down. I'm able to wait for that 1 week and I just submit. If prices come in maybe by Monday, my order will just execute. If they don't come to 25 by Monday, maybe chances of Tuesday or Wednesday, it will still execute. If it's not able to execute by 2nd of April, just cancel my order from the system. What if in between, ABSA now starts to go up? It is at 30, 34, 40. Remember, I'll be out of the 10% range. My order, if it is 25 and the lowest around is 26, it will be expired by the broker system. I will have to come in and place a new order. Now we come to IOC. What I'm saying is go and pick me 1,000 immediately, 100 immediately. If you are only able to get 50, yes, get the 50, the balance cancel. If you're able to fill the order, that's fine. But at my price. Then there is fill or kill. What I'm saying, go and pick me exactly 100. If you're not able to get the 100, don't execute that trade. So it will go and check, is there the total quantity that is there, is it enough for 100? Then executes. If it's not enough, then it cancels the order. It doesn't execute any amount. For me, I would advise don't use day, don't use IOC and FOK. Always use GTD. Put a raw price. Give it some validity date. If you're able to pick 1 week, submit that order, leave it. You'll be coming now to check the direction the market is taking. If market keeps on dropping, remember you have put the lowest price. If you are to look here, you have 20. I wish we are able to see. Let's use, let me cancel here. We put 1 day. We see if it ever did 25. You can see the lowest is around 26.9. So chances of hitting 25 may take some time. But again, if the graph here, if I put 1 month is showing me there is a downward direction, nothing stops me from putting 25. When price still drops, in 1 day it goes to around maybe 25.5. And I realize it continues to drop. I can even adjust my prices downward. Like now, what happened that week, this week, you have seen the market is dropping from Monday to around Thursday. As you can see, some of the stocks have turned green, but most of them, they are still in red. It means I can put low prices. The market is still dropping. I can continue adjusting my order. The system allows you to amend any order. So that's what validity means. Day, it's only valid for that day. GTD, for the days you put. IOC, it's for that day. It is either immediate or it cancels. Fill or kill, again, same day. Fills the whole quantity or cancels the balance. And remember, those settings can't work with market. Because market, you're picking any price. If you put market to limit, again, it will not allow you. Market to limit, what it means, when I submit my order, pick the current trading selling price. If the highest is, let's say, 20, if you're not able to fill my quantity, convert it back to that price without going to the next prices. Let's go to the presentation. I explained that. Market to limit. Then we'll come and place a trade. Now using all those terminologies. So we go to this screen. Market to limit, when I submit, it will pick 564. Let's say I had 10,000, it will pick 999. Remember what we said in market. If market order is submitted, it will go to 565. Now, market to limit, it doesn't go to 565. The balance of around 9,000 and something will be converted to a limit now on the bid side with a price of 564. So it pushes 563 down, and the new top bid price is 564 for 9,000. The balance that is there. So for market to limit, unless you want to specifically pick the top selling price without speeding to the other prices. But again, if market is going down, you are still overpaying. So I hope now you understand the screen. We'll come to it. Let me first go through the trading mode. Then we come to order entry. Trading mode, we all have two of them. We have delivery and intraday. These again, you won't find in ZD. You only find in broker platform, either on the app or portal. Why? Settlement is T plus 3. Meaning, if I buy today, the broker will debit my money today, but they will settle with CDSE. So settlement is with the CDSE. They will settle with CDSE on the third working day, 5 p.m. So that's where settlement comes in. It's not you paying, it's the broker paying CDSE. So if you buy shares today, by regulations, give 2 days. The third working day, if there is no dispute, 5 p.m. CDSE, they receive the money from the person who is buying. Then the person who is selling have already given you the shares on T plus 0 the time you bought, but those shares are not available to you for sale. Now on T plus 3, CDSE, they release those shares for you to sell. So that is the normal T plus 3 settlement. You buy today, CDSE will receive money on the third working day. On the same day, the person who is buying will be allowed now to have the shares and sell at 5 p.m. That is the normal settlement. So what does delivery mean? Delivery is where you buy shares today. They follow the same settlement rule. T plus 3. You buy today, 3 working days. On the third working day, 5 p.m., CDSE, they release those shares. You can sell the following day. So for delivery, you can't buy today and sell within those 3 working days. Because they are released 5 p.m. You can only sell now on the 4th day when market opens. Why is that there? First of all, it allows the clients to reconcile their account. If it was erroneous trade, remember, an executed trade cannot be cancelled. Broker is allowed to move that share to another account only if it is proved it was erroneous trade. So that only happens mostly in custodial accounts, because for them they can easily move. For normal accounts, a trade that is executed cannot be cancelled. But for a custodian, that is fund managers, them they are out because they can reallocate within the account. But you as an individual, you don't have another account you can reallocate to. That's why those 3 working days are allowed to allow any broker to make adjustment in form of the shares. It's only shares. Remember, money is already debited in your account. On trade, the broker debits the money, holds that in a CDSE account. CDSE on the third day will come and pull that money from the broker account, send it to the broker who sold. So that's how the delivery works. You can only, when you buy, you can only sell on the third, on the fourth working day, because the third working day, 5 p.m., that's when you receive the shares. Then in terms of sale, there is no limit. You can sell the same day. Broker gives you the credit the same day and buy back the shares. So delivery only affects the buy side. When you buy, you can only sell on the fourth working day. In terms of selling and buying back, you can sell the same day, buy back the shares same day, because the broker gives you the credit the same day. So that is the difference. It's only on the buy side, where you can only sell what you have bought after 3 working days, and that is by regulation. It's not the brokers. I have explained who handles that. It is CDSE. They are the ones who release the shares to you on the third working day, 5 p.m. Then the fourth working day, very early in the morning, you are free to sell if you are in a profit. That is under delivery. And delivery is usually used by long-term investors, where you are buying and you don't worry about selling. You are just buying. Now we come to intraday trading. This is why you can buy shares today and sell the same shares today. It says intraday, which is same day. It's not the following day, it's the same day. What happens after 5 p.m.? Brokers balance their books. The shares now follow the normal settlement the following day. You have to wait for T plus 3 for you to be able to sell. If you buy and you don't manage to sell the same day, you have to wait for T plus 3 at the intraday. So intraday allows you to buy and sell same day. The following day, you have to wait for 3 working days. You can only sell now on 4th working day. What about the sell side? Again, same as delivery. You have credit the same day. You can buy back the shares same day. So intraday only affects the buy side. Buy side, where you buy and sell same day. At the delivery, you buy today, you can only sell on T plus 3. Now at the intraday, if you are not able to sell the same day, then you have to wait for the settlement to pass. So you buy the same day, sell the same day. This is for short-term trading and usually used by day traders, where you buy at a low price, you sell at a high price. Let's go to this screen. Let's say you had you wanted to buy ABSA, BAT, and you buy at 560. You managed to buy at 560. That's the price it opened. Broker gives you the shares immediately, and you manage to sell at 630. So it means your buy order have to be intraday and sell order have to be intraday. Otherwise, you can't buy at the intraday and sell at the delivery. It won't allow you. It has to be intraday. What have you bought at the delivery, you can't sell at the intraday. Again, the settings have to be the same. Buy intraday, sell intraday. Then, in NSE, because there is no price movement, you may not make money. Brokers and NSE have come in and said, we will not charge you commissions on the side that have a lower commission. So if you do intraday, let's say the buy side has the lower commission, you won't pay commission on the buy side or the buy transaction for that share, and also NSE levy. The other levies you have to pay CMA and CDSE, because for them they are not involved in intraday trading. So you only get commission back on one side, the total buy side or total sell side, the one that have a lower commission. And that happens at around 5 p.m. During the day, you see you have been charged commission. But if you go to the statement, it has a star. It means that is not the final charge. The broker will rebalance the books at the close of the system and credit back the commission on the lower side. So you make money by not paying commission on one side and also price movement. That is only possible with few stocks. Intraday is not for every stock at NSE. GRD, BAT, Stanbic, Stanchart, EABL, those ones you can do intraday. Or a stock that is trading above 100 and is able to do in the same day more than 10 shilling. Remember, even if it does a 4 shilling, There are commissions you still pay. If you're making money, you need then either a lot of money or there is a very huge price difference. That's why I always advise it is GLD, because that one, it can do a very huge price difference. Because there is no limit of 10%. And if a broker put 10% limit on GLD, you need to talk to them. And also SMWF. Those two, they don't have 10% rule. Then BAT, if you're able to get at a lower price, sell at a high price. Or if you held shares you bought at a lower price, you can sell at a high price. The same day when price falls, you buy back at a low price. Then you wait. If the same day price goes up, you can sell back. That is under intraday. Delivery, no. So for delivery, it's more of investing. Intraday is where you do trading. Before we come to that, let's go back to the system. Now we go through the whole screen. On the portal, then we come to the app. So on the portal, we start with the online portal. Every broker have an online portal. If they don't have, I would advise look for a broker who is able to also give you online portal, because there are details you won't be able to see on the app. So I hope I've shared the full screen. Let me use an example of, I usually like using BAT. It's my favorite because of price movement. So we go to buy. We come now to the order entry screen. So if I'm buying BAT, I would put, let's say my quantity is 1,000. Actually, let's start from the start, Excel. So I have some amount I want to put in. Let's say I have 10,000. And hopefully you can see Excel. Just confirm on the chart. I hope I've shared the full screen. Let me just open. I want to see on the chart. Confirm you can see the Excel. I'm sharing that Excel. Let me open there. Blank worksheet. Maybe in the training we have somebody new and they want to know from start, where do I start? Let me zoom in. Let's say I have 10,000. It's what I want to invest. 10,000. Let me see if I can zoom. So my amount is 10,000. That's what I want to invest. The current price of the share that I want to buy, let's go to this screen. I want to buy BAT. If you look at the watch list, on the side of the watch list where there is arrows up and down, I'm using 568 as the current price. It's only that order book is not filled. So 568 is the current price. So price is 568. So I already have my 10,000. I've made a decision. Remember what we said in our presentation. You need to make decision on the amount you're investing in BAT. So this is BAT. I'm putting 10,000 and the current price is 568. So how many number of shares do I need to buy? What you need to do is to divide the amount by the price. Tentatively, I can only buy around 17 shares, but remember they are commissions. They are commissions. Those ones you don't need to calculate yourself. Otherwise, you can just go ahead and decide on this price you add now commission, which could be around, let's say 10 shillings. So that's why I picked 568. My order when I'm putting in, I might even decide to put at 550. So the 568 is to allow me to get the tentatively the number of shares I can buy, 10 shares. Let's say 17 shares. Let's average it down to 17. Can these shares help me as a client? Let's start with the dividend. Because you need to be honest with yourself. Dividend is 60 shillings right now. You have 17 shares. So if you multiply the number of shares times dividend, you receive how much? 1,020. You have put the payment mode as EFT. Bank will charge you 150 to receive. That is standard. Banks, they charge to receive EFT. Remember, registrar doesn't have extra money to pay. They are paying the exact amount that you are supposed to receive. 10,020. They only less the amount of charging, which is around 50. So registrar will first debit the 50. Then the bank, most banks, they charge to receive EFT. I don't know why they charge, but this is a setting by bank. So the amount that you receive is less the amount the registrar will charge, and also what the bank will charge you. So you receive 820. What if you are receiving via M-Pesa? It's only M-Pesa charges, which could be around 20 shillings. So M-Pesa will receive my 1,000, because maybe 20 is to pay for charges. So for me to receive BAT, which is my preferred mode, I would go for M-Pesa. So I would first make sure if I'm buying 17 shares, my M-Pesa, my dividend mode is M-Pesa. Otherwise, buying 17 shares and expecting to receive it in the bank, I have to accept I'll get less amount. Then we come to, let's remove this. We come to capital gains. Again, with still 17 shares, we see whether it makes sense to buy those shares. I buy it, let's say, for the benefit of doubt, I buy at 568. Maybe the share goes to 650. Maybe I'm lucky. So the price difference is 650 minus, if I'm to sell, so my capital gains it is 82 shillings per share. What profit will I get? The number of shares I'm buying times the profit per share. Again, 1,384. But how long will this share take to go to 650? It can take even months. So is it worth me investing 10,000 in BAT alone? It's not worth. Waiting for 3 months to gain this amount, I better even put this amount in money market fund or special fund. I may get these profits. But if I'm also targeting the dividend, I'm not selling before dividend, then it means I may get a total of what? Let's use M-Pesa 1,000, 2,000, and I'm waiting out to around July, because maybe the payment is July, August there. So it is a decision you need to make. Will I be topping up this 10,000 every month, or it is one-off? If it is one-off, it's not worth going 10,000 to BAT. 2,000 waiting for all those months. There is a share that I can buy raw at a lower price, buy more number of shares and get a good dividend, and maybe even price movement is high. So before you even determine the shares that you are buying, always know how much will I get. And that's why even I see they are saying you can buy one share, that one share cannot help you. If I buy one share here, let's even change this to one share. That is the profit I'm willing to take. But here I'm assuming I'll get huge profit. But again, is that practical? So when you're buying buying shares, always be practical. Check the number of shares you are buying, multiply with dividend. Look at the amount that you receive. Also check the mode of receiving that dividend. Is it even worth it? Because at the end of it, if amount is less, the bank may overcharge you, and you find you're even in a debit. So we have determined BAT I need to buy. So we come to the platform. I have said I want to buy BAT 17 shares. So I'll come, select BAT, leave instrument type as normal. We no longer have ODD. Then I'll put my 17 shares here. Put limit. I don't want to buy at market. Put my price here, that's 568 or 550. Let's say I've gone to market depth. I've identified 550 as my price. I know that 550 cannot execute the same day, so I'll put GTD, give it, say, up to Wednesday. Leave it as delivery, because I'm not buying to sell the same day. Unless I'm doing the trading, that's when I select intraday. So intraday, you can put even with GTD. What that means is I can buy shares today at the intraday, at 550. If I'm able to get, then I can sell the same day. That's why I'm putting intraday. However, if I'm not able to buy today, let's say the order executes on 31st, the same day, I can put an intraday to sell at a high price. It will still be intraday because my order is set as intraday. But this is now for advanced trading. I think I've done a training on this, where when you are buying, you put GTD and you put intraday. So that if prices go way high, you have bought, let's say, it's 550, and the same day the order executes, BAT is able to hit 600. I can put a sale order the same day at 600 and buy back and sell the shares back. Remember, there is that commission rebate. So intraday, you are saying the day the order executes, I can easily come and do a counter trade. That is, sell back the shares. However, delivery, what you are saying is, when I submit my order, if it executes, the day it executes, I will wait for 3 working days. I can only sell on 4th working day. Now we come to market. I'm buying my 17, so I'll be subjected to the current trading price. Market to limit. Pick the current price. If you are not able to pick at 5, whatever 5, let's say it is 568, go to the next price, fill the balance. If you are not able to fill, go to the next one. That is at the market. At the market to limit, pick the top one. Sorry, it's market to limit. You pick the top one on the supply side. If you're not able to fill, convert my order to demand side at the same price. Don't go to the next prices to clear. Always avoid these two, market and market to limit. Always use limit. Then at the day, use GTD. Don't use the day unless you want to place the order the following day. Always use GTD at a raw price. Let's say 568. Right now I can't execute the trade. That's why I can play around with the prices. I put 31. Then click buy. You get now summation of the charges. There is a brokerage that you'll be charged. Statutory, which includes CMA, CDSC. There is NSC and also stamp duty. Once you confirm that order is submitted to the market, right now the market is closed. Closed is not my account, it is the market. But if I go to order status down here, where is the order status? It is here. If I refresh, I'm able to see my order. If market keeps on dropping, I can come and edit the pen icon and change this price. Maybe the market is dropping, I can put 550. So I drop my order based on the price direction. But again, don't drop your order too much such that when market recovers, you are left without execution. So even if you are executing, adjusting your order down, always check the direction the market is taking. Like now for ABSA, you can see it has been up and down. Going, is this ABSA? No, this is BAT. It has been up and down. If you're going at a very low price, there are chances you may not get. What about if we pick ABSA? We pick 1 month. You can see it is on a downward trade. So there is a chance I can put at 26 and still get 25. But again, you need to check the performance of that stock. So I hope I've covered that. Let's go to, let me see what we can do on the app. Let me stop sharing. I go to the app. I just show you now how to place the order. Hopefully when the market opens on Monday, I should be able now to do a video and post on YouTube and TikTok on how to actually now select prices based on the market. Let me open the software I use. Scraspy. I'm just connecting my phone. So today I'm just showing you how to put the orders. Then if time allows, I should be able now to do a practical one in terms of price selection. in terms of price selection, because that is the most important. Even if you know how to place the orders, you need to know how to select raw prices and prices which execute. Just opening the app. Let me just unlock the phone and log in. So all these I'm not doing on simulator, I'm doing on the on AIB platform. And most of the brokers, they have the same platform. So what I do with AIB, you can do with any other broker. Apart from ZD, ZD you can't do what I'm doing. ZD, I don't think they have intraday. They may have the other options. Let me just connect. And I hope now for beginners, you should be able now to trade on your own without relying on a broker. Let me see if it is connected. I'm just changing my Wi-Fi on the phone so that it connects on the platform. I think I can close the online. Let me just reconnect. Then we go through the order entry screen for the app. And if you have any question, you can always put on the chat, especially on intraday and also dividends. I know there is an issue with dividends. There are those people who have received and you find the bank have already taken everything. It's because banks, they charge receiving EFTs. You may need to check with your bank how much they charge before you decide using EFT. So for bank, I would advise, if you're receiving huge amounts that M-Pesa may cost you heavily, that time go for bank. However, you already know there are some registrars who don't pay via M-Pesa. I think Equity is one of them, and it's because of competition, which is not healthy for the markets. They would want you to be limited to their platform, either through their bank, or if you have another bank, they can pay another bank, or you use Equity money platform. I think that's where now the competition comes in. But it's because us as the investors, we have never raised this with the CMA. If CMA knows this, then they would they'd be penalized. I'm waiting for the phone to just respond. Let me connect. Go through now the online portal. I may not be able to show you on ZD. For ZD, you will use my M-Pesa, so I might disclose my M-Pesa details, but it is the same entry screens. So whatever I do on the app, there are some settings you can do. If you are not able to do, remember you can't move your account from ZD to a broker. You can only move from broker to a broker. So for ZD, you may be forced to open account with a broker if you want to do some of these settings. And for ZD, mostly I would advise use it for trading. That one you can play around with trading. But in terms of long term, I wouldn't advise use a broker because you're investing on your own account. I'm just reconnecting my phone. Let me change Wi-Fi. Then I share the screen. We go through the order entry. And I'm using a real app. It's not a simulator. I'm just putting in my login details so that I don't disclose my account. Let me put my password. Hopefully I have not shared the screen. Just logging in. It's taking some time. But you can be putting questions on the chat. Let me be picking a few questions as I wait for this to respond. Is there a mechanism where institutions execute large volume buy and sell transactions off platform effectively through private or over-counter arrangement? How does it work? No, they go through the same platform. Huh? The only difference is them they are going through a trader at the brokerage who have access to NSE trading system. You are going through a broker platform which has limited capabilities. So in terms of executing large trades, as I said, you find, let's pick an example. KCB custody, they want to sell 1 million shares of BAT. And there's somebody else, maybe from another fund manager, who is willing to buy same number of shares. They'll just come and place on NSE main trading system. There are additional filters they can put to limit that order. It will execute amongst themselves, but if there is also somebody else who have placed their order within that price, they will also execute. There is never off the system. We don't have off the system for shares that are listed at NSE. Those ones we don't have off the platform. You cannot be disadvantaged, only that the main trading for NSE allows you to do extra steps. So let's go to watch list. So when you are on the dashboard, you go to watch list. Let's wait for it to load. You have the list of shares. I don't want to go through the whole app because some of us may be on another platform. So if you're buying, don't swipe. If you swipe to the right, it takes you straight to the order entry screen. But you have not seen the prices. With this screen, you just be putting your order blindly. It might execute at high price. So what you do, you click on the share. Let's take BAT. So you tap on it. Once you tap on it, it should open market depth. Right now, the market is closed, where you can select the prices. Down there is a line graph, but when you click on it, it changes to candlestick. I usually don't use the one for the app. I use one for the portal because it allows you to select those monthly and you can see the direction the prices are moving. So if you are buying, you click on the buy button. You get the order entry screen. Again, the same settings, but with the minimal selection. You have the share at the top, instrument type. You have the quantity. We take our 17 share. Then you have limit and market. Limit, we have said, is where you are putting a price here. Let's say 568. So that is the limit. If you put market, you can't put the price because you are saying just go and pick any price. So always use limit with the price you have selected from the previous screen. I would explain once I get a screen, maybe a share that I can use to explain how to select the prices. On Monday, I can do a short video on how to use GTD. So if you have selected 568 and it's not the current price, let's say the share is at 570, that's where now GTD comes in. Day is where you are putting the order for that day. The date is there, 28th. It either executes that day or it cancels. GTD is where you are selecting a date here on the calendar and you say my order goes up to 31st. So my order at 568 will stay in the market for those number of days. GTD, good till day, that is up to 31st. It either executes, it expires, or you come and cancel yourself. Delivery we have explained is where when you buy today, you can only sell on the third working day. Intraday is where you buy today and sell today. So it allows you to do the transaction the same day. When you click on the buy button, it gives you another summary and you can submit that order to the market. Collateral shortfall means I don't have a credit. There is an order. I already have some orders which I've already executed. I should have, I have this order which is already in the market. Remember, I didn't cancel on the portal. So this is the order that I put on the portal. So what you do on the portal reflects on the app. And if I cancel this order here, remember on the portal I've shown you how to modify. Even on the app you can modify them. let me stop cancelling. Let me first show you how to modify on the app. If you click modify, you can only change quantity and the price. So you can change the price. I can put it back to 560. Remember on the portal I'd put 568, then I changed to 550. Yeah, I can change back to 560, modify, submit. You have to confirm. It is modified, and again it reflects the new price. If I want to cancel, I can cancel. Working order says no because market is closed. If it is yes, it means the order is at NSE. So if I click on cancel and cancel completely from the system, I remove that order completely from the system. So those are the order entry settings on the app. Again, they are limited. If I pick like ARM doesn't trade, as river mining, it was removed from the market. So I have limit market. Remember on the portal I had market to limit. So on the app you don't have market to limit. Then we had the validity, we had day, GTD, we also had IOC and F4K. So on the portal you have two additional. On the app they are limited to those two. It's because of the screen of the phone. Then same delivery, intraday. So those are the settings for order entry. Let's go back to the presentation. Hopefully now we can brush through the other remaining. For the beginners now, at least you know how to place the orders. Let's go back to the presentation. So delivery, purely for investing. We are buying, you buy, you wait for the settlement. Intraday is where you can buy and sell the same day. Just pure trading, capital gains. So now we come to what really moves the market. We did panic, all of us, the last 3 weeks. When KPC IPO results were announced, market dropped slightly. Then this week we have seen a very huge drop in the market. So you need to really understand what drives the market. So in the NSE, who moves the market? First of all, market is driven by big money, not small money. If I'm putting an order of, let's say one order for BAT 560, it will hardly move the market because there are also other people who are placing the order. Huge trades from institutional investors. These are local pension and also fund managers and also foreign investors. Those are the ones who move the market. There is also another category under retail, which we call HNI, high net worth. These are people who are buying in huge quantities. Them, they can move markets. So we have two key players, local pension funds, because people like NSSF, they invest our contributions at NSE, part of it, and others from to government boards and other products. We also have individual pension plans. When you contribute, like NSSF Tier 2, if yours doesn't go to NSSF, it goes to an individual pension plan, which maybe it is a sponsored, is an employer sponsored. That is, employer deducts, sends part to NSSF, part to another pension plan, where they have agreed even employer to match up. So when they receive that contribution, they usually come and invest in NSE. Otherwise, where are they giving you that interest? It's either by buying shares in NSE, buying shares in international markets, investing in corporate papers and also corporate boards, government boards, treasury bills, treasury boards, where they make money now to give you that interest. They also have other products they invest in, which could be short-term, even overnight trading. Like let's say an institutional investor want to buy shares and they don't have credit. They can borrow from those pension funds. They let them that money, they come and use, then pay them interest. That interest they receive is what they pay you. So in NSE, we have key players, local pension funds. There are so many. If you have never contributed to pension plan, then you might also be losing in terms of your retirement. Always have one. I'll be coming to that hopefully tomorrow. I'll touch briefly on pension, how it works. When we contribute and receive that money on monthly basis, they come and invest that money in same shares you are buying, and they buy just the normal way. Only that for them, they don't go through the trading platform. They go through broker traders. So if we have, say, 26 brokers, and each broker have 3 or 4 traders, it means those around, they come to around 100. They are the ones who move the market. We also have HNIs, high net worth. People who are buying shares in huge quantity, like Akina Didinyoro when he buys KPLC in huge quantity. They can easily move the market because they can easily clear demand or supply if they are buying or selling. So these are investors who trade in large volumes, and their action can easily create a major price movement. For us, retail, the ones whom we are buying small quantities, we always follow them. If they are buying, we follow their trade. If you are many of us, we push the prices. So big money can drive a market to whichever direction either the demand or supply is. And how does that affect? So first of all, large buy orders, increasing demand, price goes up. We covered that when we are starting. So you start clearing supply, moving the prices up. Large sale orders, you are clearing demand. That is, you increase supply, you start buying from, you start selling to the people who are buying, start clearing the prices down, price goes down. And these large investors, they don't buy every day. They enter and exit in phases. They don't come all at once. They may put part of money in shares. After some time, they can sell portion, move it to boards, move it to even money market or even to international market as they watch the market. When prices go down, they might decide now sell profit in international market, come to NSE. They also play with dollar. Like now they can buy when dollar is 129. They buy in international markets. When it goes up to 160, they sell, they convert, they have gained through price movement in shares, then they convert dollar at a higher price, again make another gain, come to NSE. Remember, they are doing all this to make sure they can guarantee you that return. And that means they can easily create an upward trade or a downward trade in shares. And this is always visible in terms of price movement and volumes. That's why you as the client, as a retail, you need to have access to online portal for a broker. What does that mean? If you're on ZD, you may be disadvantaged. If you're on Dosika, I know you can get some of those details, but not detailed as online. Why? Let's go to online portal again, so that we see what have been driving the prices for the last few days. We have panicked. You can easily tell whether it is foreigners or the local funds based on the quantity, or if it is a high net worth client. Let me just log in. Then I share my screen so that when you see the portal turning red, you don't panic again. Because there are people who lost by selling. When you see an SC saying market bread with whatever number of shares that were lost, what they are saying, there are people who sold at loss. But is that true? The first screen you go to, you don't even go to sector. There's a screen that shows you market statistics. I'm on the online portal. Let me even close all these. I show you how you can add them. If you don't have them, let me close. I'm just clearing this. Hopefully I'm not logged out. Let's say your screen only have those three. You have watch list, you have market depth, and you have the graph. You want to add the rest. Where there is a circle on the right bottom that has a plus sign, you just click on it. On any broker platform, you tick all these. Make sure they are ticked in green. I hope you can see. That's why I shared the full screen so that you can see. I've added those widgets. They are here down, all of them. I can remove whatever is duplicate. Like this is duplicate. This is duplicate. I can remove portfolio because I have it. Gainers and movers I don't need. Yeah, those ones, they are enough. So we start with market statistics. This is the most important. Let me zoom this side. So this gives you a breakdown of what market have done for shares. Let me first scroll to the right. So this equity is summary of what shares have traded that day. You have the total trades that have been executed, 12,000, the number of orders that have executed, buy and sell. Volume is the number of shares, total number of shares, equity, ABSA, and the rest. When you add the total number of shares which have been bought and sold, gives you the volume. Then turnover is now the volume times the average price of all those shares. Then you have foreign buys, foreign sales. Foreign buys, foreign sales. Foreign buyers, foreigners what they have bought today in form of all the shares in the market. Foreign sales, the total of what they have sold. ABSA, Barclays, ABSA, Safaricom, BAT, if they have sold the total, you get it. Now, if you are to add these two, foreign buy and foreign sell, it gives you total turnover from foreigners. Again, I repeat, foreign buys plus foreign sales, they give you total turnover from foreigners. You only need to deduct that from the turnover you can see here. The net position is local investors. Local investors. This also adds a portion which is very small, which is called East Africa investors. Those ones, I don't even need to factor that because their trades, they are very small. So if you are to add these, it comes to around 400 and let me see, 412 million in total. If you are to deduct that, on this side you have around 370 million, around there, which is our local investors. What that means is foreigners and local investors were like, they did a tie. It's only that foreigners, they did more than us. Within that portion of retail investors, there is the category for institutional investors. They are the ones who do huge transactions. When NSE says foreigners are leaving the market, you need to first check on this screen. They are selling more than the buy side. So that means they may have moved that money out. But then what happens the following day? Did they actually move the money? Remember, they deal with custodians. When they sell, they may come back and buy those shares. So when they NSE say foreigners are moving out of the market, they use a data maybe for 1 week to determine that actually when they sold, they didn't buy back. Because remember, for them, they are after capital gains. They sell today, they buy back tomorrow. So we come to the next screen. It's called sector statistics. Again, each sector and what foreigners did. Remember, the market didn't drop just 2 shares or 1 sector. It is all sectors that went down, most of them, apart from ETFs. ETFs, they didn't underperform. If you look at the same sector, you realize it's only a few sectors where they sold. Actually, I think bank sector is where they sold more. Let me see where it is. Let me scroll to the right. Yeah, BNK is the third one. If you look at the foreign sales, it's 240 million. No? And foreign buys is around 86. Then there is a sector, is it Teleco, around 2 million. That is ETFs. They were also selling. Then the last one is 9 million, which could be energy. This is Yeah, the investments 9 million. Then down there is Telco. Telco is Safaricom. Huh? So it means foreigners were selling Safaricom. Then at the investment, this could be NSE shares, but you see up there. Then ETS, this could be gold and also SMWF. Then at the banks, we will see the banks they were selling. Huh? The reason why I'm showing you now that connection from market statistics to sector statistics to individual, so that you're able to tell why foreigners actually leaving the market. Because again, if there were more sales on a certain sector and foreigners were not selling, it means it is our local funds. You move now to market, my watch list. Now you come to individual shares. Again, scroll to the foreign buys. It is there. You have turnover, foreign buy, foreign sales. So you check now individual stocks. Let's take the second stock. It is which one? It is BAT. You can see the arrow pointing down. BAT. The arrow is pointing down. Huh? But if you scroll to the left, foreigners were not actually selling, they were buying. So who was selling? That's why now local funds and high net worth come in. Huh? Let's go to another stock that was dropping. You can take maybe a different stock. Let me just scroll to DTK. This is the favorite for Didi Nyoro. It's the first one on the screen. Let me scroll. We just see there was no foreign participation in DTB. It is the first one, the one that I've done 14 million. What does that tell you? It is high net worth clients within Kenya and local funds who are moving that price. Huh? So where am I trying to drive that discussion to? When the market is going down, never panic. Always check which season are we in. Like right now, let's start with the KPC IPO. When they announced result, all arrows were down for 3 working days. The 4th working day, arrows were green. Why? The government had to shock the market to release those results. Now, this week, market is dropping. Why? It is the same week the pension funds credit your interest. What does that mean? They have to sell off whatever they have made profit at NSE, calculate the interest based on the earnings from NSE, credit that interest, then come back and roll over that investment for the remaining number of months. But remember, this is for interest for last year. What about from January to date? Remember, that is invested separately. That's why you have found the market has not really dropped. Yes, NSE wants the market to believe. It has not really dropped. We have seen the market go way down than where it is. So as an investor, when you see it is red, always know what is this that is driving the market down. Yes, foreign investors, they are selling, but are they leaving? That data you can only tell from CBK. Is there demand for dollars? Because ideally they are exchanging money from Kenya shillings, because NSE is in Kenya shilling, to USD or Euro, depending on how they withdraw it. But have we seen demand for dollars? Right now, they may even confuse us because there is also demand for oil. Remember, there is a shortage for oil. So that may contribute to demand for dollars, but we have not seen that. So ideally this week, it's pension funds, that is, akina NSSF, and where now employers take the NSSF tier 2. They are the ones who are driving the market down as they try to rebalance their portfolio first, and also they try to reallocate those interests. Remember, interest is based on what they have earned. They have the boards, they have shares, they have international markets. So once they sell and they get their returns, those returns are the ones they allocate the interest they give us. So that's what you have seen. What will we see next week? Hopefully by that time they will have completed their rebalancing. We expect the market to go up. Don't panic. Again, when you are buying, don't put orders very low. Don't put prices like if you are buying ABSA, if you are trying to put a price of 24, 25, it won't execute. You have to be very patient and price may not come down to that level. That's why you need to wait until Monday. If you are placing order, wait for Monday, see how the market opens. If the market is going up, putting a low price will not do you justice. You'll only miss that opportunity. And where do you get that data? Let me close this. You can only get that on the online portal. Here it is, the graph. You can always determine where the share is going. Huh? That is ABSA. Yes, it is going down. In 1 month, you can notice it was going up. Huh? 3 months, it's going up. 1 month, you can see there is a direction down, but the arrow, I hope you can see that arrow, down, down. What if Monday it starts to rise and you have put a lower price? It means you lose that opportunity. That's why even if you are putting a GTD here, always be very cautious of the price. And that price is determined by what you see at the market depth. This screen which is empty today, it doesn't have prices. I wish I was doing this training during the working day. So basically what you have seen this week is just pension funds taking profits. They reallocate those interests. It is that time they credit those interests. Once they are done, they will roll that money next month for investment. Meaning what? You might see more demand coming in. Remember, they have pushed the prices down. You see the market going up. Do you still want to wait until market goes up? It is the best opportunity now to buy some shares at a cheaper price. Let's take a good example, KCB. It has dropped from what price to what price? Let's see, 1 month, from 80 to around 60s, 66. I don't expect it to go to some of those prices I'm seeing, 50s and even 60 may be very hard. You can see it has already started to go up on that graph at the head. Hopefully you can see that graph where it's coining up. This is the right time if you wanted to buy KCB. You have a price range of 66 minus around 80. It's around 14 shillings, which you can play around with the price if you are looking for capital gains. Let's go to equity. Again, 1 month. It have not moved a lot. Again, a difference of around same price. Again, a better entry point of 60s, 66. Then if you are taking your capital gains at 70, 80, you can take your capital gains. But there are projections it can go to 100, which I highly doubt, because if that share goes to 100, it means the share have ever gone above what it has done for the. I wish our portal can show. It can only show up to around 2025, just I think 1 year duration. But on stock analysis, it's only that NSE removed that. You could see the highest it has ever gone. Because again, you don't want to buy share at its highest price. So now, with that, what does that mean? There are shares which have started to show green. It means those prices are going up. Do you still want to chase the prices when they are going up? You have opportunity to get some stocks at lower prices. Look at GOD. It has dropped, really dropped from the prices of 6,000 to around 5,000. Yeah, 6,600 to around 5,400. If you are looking to buy, you can buy a few units, just 2 or 3 units. Don't buy a lot. The maximum I can tell you is 10 at this price. Then when it goes to 6,000, just sell it off. You have a difference of around 1,000 or 1,002 if you sell at 6,200. That is for day traders and also those who are in the market for trading capital gains. You buy gold at low price, sell at high price, but wait to see how it opens on Monday. If you notice on one day, you can even buy at a very low price, 5,350. There are chances on Monday it can even do 5,000. So if you're able to get, when it goes down, get as many units as possible. When it starts to go up, now prepare yourself to be the supplier in the market. Let's see if we can see if it is the one the foreigners were selling. It is the second, it's the first one on the line. Yes, it is the gold they were selling. And this is somebody who was smart. They bought at a low price. They are trying now to sell at profit. But remember what Didinyoro have always said. We have foreigners, we have Kenyans who are foreigners. So let's go back to the presentation. So at least now you have known some of the cycles you need to be aware of. Never panic in NSE when you see the market looking like it is red. Sometimes there are reasons which may be outside our control, because if ROCO funds and pension funds are taking profits, you can't prevent them, because they have to give those returns to their to the contributions which have been made. Remember, they are also part of money market fund. They also put in NSE, but for money market fund, I think interest is monthly, so that doesn't affect NSE a lot. Foreigners, unless they are taking profits, or there is what is happening in Iran, which ideally should not be affecting NSE that much, but most of them they sell to take liquidity so that they have cash at hand in case of anything. They can use it. But again, when everything stabilizes, they come back to the market. So then why would market rise and fall? Again, upward trade, it means there is more buyers than sellers, again pushing the prices, and this is contributed by positive sentiment, which may be bringing demand in the market. In terms of falling, more sellers than the buyers, and it is not in terms of numbers, it is in terms of volumes, the number of shares. Mostly either people taking profits, again foreigners taking profits. High net worth, mostly they don't take profits. Those ones they invest long term. I've never seen a high net worth who buys and sells. Then we have pension funds. Remember, they have to credit interest. So for them, they are mostly on taking profits. Or if a share have given good dividend, they calculate a dividend yield. We are coming to it next slide. They realize dividends are giving higher returns than selling. Then that time, they can hold and take dividend. Also, negative sentiments. When there is a negative sentiment in the market, you find the prices going down. Like what happened with Williamson Tea. They announced a profit warning. People panicked. They sold. But it's because investors, they don't understand what is profit warning. It doesn't mean the company have made losses. It means their profits have reduced. The reason why they are doing that is because they might give a lower dividend. Remember last year they gave bonus. They may not give bonus this year. It's just to caution the market so that you don't expect a high dividend while they may cut dividend to a lower level within their profit margins. Now, Williamson Tea owns Kapchorwa. Kapchorwa have not announced a profit warning. So what does that tell you? People panic, they sell Williamson Tea because it have announced profit warning. Smart investors, they buy at a lower price. This is a share. The price dropped because of bonus dilution. It didn't drop because of anything. They gave a bonus of 1 share for everyone held, meaning the price had to drop by the same ratio. You divide price by 2, giving you an opportunity to buy Williamson at a low price. Then when it goes up, you sell. But why sell a share that is giving you dividend? A share that have given bonus, don't sell. Hold on to it. Even add more. Then when prices go back to 300, you can decide to sell. But a share that is giving bonus, why would you sell? Bonus means we are giving you more number of shares. When prices drop, yes, your valuation doesn't change. But when prices go up, then we have Standard Chartered. They also announced a profit warning, purely because they had a pension case with their former staff. They paid. And when they pay, they are paying from their cash, meaning what? Profit goes down. But does that really affect the company? They will only maybe pay using last year's profit. If they didn't manage, they pay with this year. But with the time, profit will improve. And they continue giving the dividend they had. But prices dropped because people panic. They thought when they announced a profit warning, it's a loss. We have KQ. I don't know why they didn't announce a profit warning, because they have really dropped in terms of performance. They are in a loss-making position. What will that do? People who bought thinking the price will go up because they will announce a profit, now they start selling. Prices drop down. Is that a share you'd want to hold? No. Because the next time it rallies, it may take a while. They have already announced a loss. A very huge loss. That's why I think they also announced a profit warning. So profit warning means either the profit is dropping, or if the company was in a profit, it will announce a very huge loss, or if they are in a loss, they will announce even an increased loss. You only need to check, do fundamentals still stand? Is this company able to make profits going forward? Is it being affected by its own operations? Are they winding up? Is it like Umeme where they are no longer in operations? That's why they have announced maybe this profit one. No, you need to check some of those things before you decide to sell. You may sell a good share because of negative sentiment in the market, you end up losing. Then there are those shares that you find they move sideways. That is, they keep on moving up and down. Huh? This is where the sellers and buyers, they are balanced. Huh? Price moves within a certain range, like BAT. You find it falls under that category. Those are stocks you want to hold now as a day trader, where you are buying low, sell high. As a long-term trader, don't sell. Always try to buy at a low price, accumulate. Remember, market will never move in a single straight line. It will never go up or down. It moves in a style, up, down, up, down, up, down, depending on demand and supply. And once you understand those trades and what are causing those trades, you are able to make informed decisions. When market is going down, that is time to buy at low prices. Use GTD. If market is going up, yes, use GTD, but don't put very low prices. If it is a market which is sideways, then there you have a chance of putting a low price and wait. So we come now to what have been confusing the markets, valuation formulas. I'll just go through the basic ones. Then next time we'll be going each at a time. You don't need to calculate any of these. There are sites which I've done for you. I'll show you briefly. So valuations, they help you know if a stock is cheap or expensive, but that does not mean it is cheap in the market. You could be buying a stock when the price is dropping, but valuation shows you it is still cheap. Remember, you might be buying at a very high price, then it drops, stagnates somewhere. So for a beginner, always focus on simple key metrics. Actually, don't try to struggle understanding some of these valuation formulas, because as a beginner, remember, you're not a finance person. When you start interpreting some of these formulas, they may end up confusing you. Yet in NSE, you only need to know, where is the market going? Is it up or down? If it is down, is this share still making profits? Is there chances of it going up? Buy at that point. If prices are way too high, that time, sell to take profits, wait for it to drop. But now, if you are able to interpret some of these terminologies, then you can go into deeper analysis. In NSC, never use guesswork. That you look at the data, EPS, it is high, you want to guess this is the valued stock you want to buy, you will end up making mistakes. So I will go through price to earning ratio, P ratio, then dividend yield, and earnings per share, because P ratio and earning per share, they are related. So we start with the dividend yield, because this is what most investors use, the long-term investors. Dividend yield, it determines the income you are earning from a stock in terms of dividend. Remember, dividend is free money. So you divide the dividend with current price times 100. It gives a percentage. It tells you whether the returns you are getting are high or low in terms of dividend based on the price. But which price? This is the mistake we make. Like if I was to tell you, is BAT a good stock? Some of us would start arguing. I would go through dividend yield. You take the current price, you're trying to do that valuation, and at that point you tell me in terms of dividend, this is not a good stock. But remember, there's somebody who bought at a lower price. His dividend yield is different with person who is buying today. Remember them, they are basing using their portfolio valuation. You are basing on current price because you are buying new shares. There is somebody who have bought and they are buying more shares. Their dividend yield is again still different. They already have the average price and the new price. So I'll come to this on Excel. I'll show you how to calculate it. Let me first go through the basic explanation. Dividend yield, again, we have said it's the dividend amount divided by price, depending on whether you are buying new shares. So you use current price. If you already have shares, you are using your average price to determine your returns. If you have to hold those shares, what is the return based on the price you bought at? If you are buying more to add, then you are saying, I already bought some shares, I'm adding more. So what is my new average price? You use that now to divide the dividend to see now your new returns. So once you understand that, now you're able to make decisions. Do I hold this share to wait for dividend, or do I sell for profit? The higher the yield, the more the income. So the higher the percentage, the higher the income. But always check, is this dividend sustainable? A good example, Umeme. Yes, they had given a very good dividend, but is it sustainable? They have already wound up their operations in Uganda. They are looking for other business opportunities, which may take a while. And there is also some money they are following up with the government. Once they receive, I know they will also be giving some dividend. It may take a while. For those who have shares, you can hold and wait for that time. But if you're in a profit, these are shares I would advise you to move out. That dividend is not sustainable. Look at share like BAT. They give a very huge dividend. Is it sustainable? They are still making profits. They have been giving similar dividend. So let's go to Excel. I'll show you how to calculate now dividend yield. Then we come to the other valuation. We go to boards. Let me open Excel. Because this is a mistake most people do. You want to use the current price to determine dividend yield. It all depends on whether you are buying shares or you have them or you are adding more shares. Let me share entire screen. I want to start with a portfolio valuation. Let me go to my portfolio valuation. I have BAT, one share, average price of 501. Let's go to Excel. So I have one share. This is a test account. I don't use my real account for training because of exposing my account. So 501 is my average price. This is number of shares. Then we have average price. Then we have a dividend of 60. So I'm using the current available dividend. It is 60. I'm not using 70 because I'm not receiving the 10 one. I'm receiving the 60. Then in my portfolio, my profit percentage is, at the portfolio, there is this percentage here at the head, 13.16. 13.16. That is my percentage profit if I was to sell today. So this is BAT. Shares, they are existing. It's not new. I already have this share. So what is my dividend yield? We have said dividend yield. Dividend yield is equals to dividend divided by current price. Then you multiply this by 100 because it is a percentage. It is 11.9. That is my dividend yield. As Peter who have shares. Dividend yield versus profit. We come to somebody who doesn't have shares, new. it is BAT. Again, let's say you are buying one share. What is the current price of BAT? We have it here. It is 568. Current price 568. This is not the average because I don't have the shares I'm buying today at 568. Dividend again 60. What is my profit? Profit is 0 because I've not bought. What is my yield? Dividend yield. Again, dividend divided by price times. Don't worry, this video I will upload on my YouTube and also TikTok. So the dividend yield, if I'm buying new shares, is 10.5. Notice the difference. I have the existing shares, my average is 501. Dividend yield is 11.9. Somebody is buying shares today of the BAT, their yield based on current price is 10.5. You see, the returns based on these two people is totally different. One is lower because they are using a high price of today, buying new shares. There is somebody who bought at a very low price. Their yield is also different. Remember, they also have a profit in their portfolio. What if I'm new? I may need to understand. If I buy these shares, I will sell at what price? Let's say if I buy today, I'm just doing Excel mathematics. I sell, let's say I'm targeting to sell at 600 minus the current price, divide by the current price, divide this by current price, then you multiply this by 100. It's the profit I would be expecting, allowed 23. So if I'm selling today to target to sell at 700, maybe in the next 1 week, I would not wait for the dividend because the dividend returns will be 10%. But is this guaranteed? So for new shares, you need to have a target price. When you're saying this share I can't buy for dividend, you need to have a target price because you need to compare the profit you make against the gains from dividend. Let's come to my existing. Current profit 13. Dividend yield around 12. Would I even think of selling? I can't sell because dividend, even if it's lower, if I take another dividend next year, which may be even higher, I'm able to recoup my profits. I can wait, but I'm also still in profit. Now, what if I'm adding? I will need to add now the current price again, get the new average, do the same mathematics, get the new dividend yield. So dividend yield depends. Are you buying new shares which you don't have? Then that time you use the current price. Do you have the existing shares? You are using the average price to determine your return on dividend against your portfolio valuation profit. Profit is there in the portfolio valuation. It is here. You are comparing dividend yield against these prices, these percentages here, to determine selling today and taking dividend, which is better. Again, taking this profit against this dividend, which is better. But remember, the portfolio valuation doesn't include costs of sale. Let's go to portfolio valuation. The average price here includes the cost of buying. It has brokerage and levies. That's why it's not same as the price you bought at. Market price here doesn't have those. It doesn't contain brokerage and levies because you have not sold. So even this percentage here is not the right one. You need to factor those costs. I hope now you have understood. So when you're doing dividend yield to determine whether you're in, you want to take dividend or to take capital gains, you only need to compare your gains in portfolio valuation against dividend yield, which is dividend amount divided by your average price in the portfolio valuation times 100. Whichever is higher, then you can decide to sell. That's how pension funds and foreigners use. They use their portfolio valuation against dividend. They take whichever is higher. Remember, they have guaranteed somebody some returns. Assume they bought BAT at 300. They wouldn't sell at the current price because if the profit is 13, they better wait for the dividend because 20, if they give you 13, they have around 17%, which is they retain as profit in their books. So that's how they play with the market. So if you are following up with foreigners when they are selling and local funds, at one point you'll be making mistakes unless you know how to calculate dividend yield effectively. And I think now you should be able to calculate it based on what you have. So for dividend yield, first of all, you check whether you have those shares. If you have those shares, you use the average price. So it is the dividend divided by average price times 100. You compare with your portfolio valuation profit. Whichever is higher that time, you can decide if profit is showing you, say, even 100% or above 100%, and dividend yield is, let's say, 10, then you better sell, take the profit, because that is telling you your profit is way high. If it is lower, then you don't need to sell it. You better take dividend. So those are some of decisions most of investors make. But remember, this share may be giving dividend every year. When you sell, are you willing to buy back at a high price? So when you sell, always be ready to buy at high price, or you go to another stock. If you don't have those shares at all, that's when you use the current price. Dividend divided by current price times 100. If you already have shares and you intend to buy more, you use the existing average price against the current price, get the new average price, use that to divide the dividend. That time you are doing dividend yield correctly and you are valuing your portfolio properly. Then we come to earnings per share. Earning per share is profit made per share. That is the profit divided by number of shares that are listed at NSE. You go to company financials, got the profit after tax, divide by the total number of shares that are in NSE. That is the total shares held at CDSE. Divide, you get earning per share. That is each share, how much profit have it made. Remember, we are all shareholders. You have a share. You need to know my one share, how much profit have it made? Out of the profit the whole company have made, how much have my share made? So you divide by the total number of shares, you get what your share have earned. Higher earning per share means that company performance is strong. So that's what it means. Huh? So EPS, it's more of profitability. Are your shares profitable? Is this company actually profitable? Am I worth holding these shares? So you divide the earnings, that is profit, divide by the number of shares in the market, not the ones you hold, the total number of shares in that company. Dividend yield is more of income. We come to the most misinterpreted ratio. PE ratio, profit price to earning ratio. Remember, you have earnings per share. So for you to calculate PE ratio, you need to first get earning per share. Earning per share, we have said total profit made after tax divided by the number of shares. When you come to PE ratio now, it is the current price divided by earning per share. Current price in the market divided by earning per share. It shows you how much you are paying to buy that share for 1 shilling of earning. So how much you are paying for 1 shilling of earning. A good example, if PE is 10, it means you are paying 10 shilling for every 1 shilling earned as profit per share. I know there is this misconception, it tells you it is number of years to recover your investment. Like this, when PE is 10, you may misinterpret it as 10 years to recover back your money. No. How long does it take to recover your money? It only takes enough time to pay the commissions when you sell. Remember, you have your portfolio valuation. It has shown you profits. So when you are buying, when you buy today, it will show you a loss because of commissions. So the number of years it takes for you to recover your money, remember, it is not lost. The company is still there in the NSE. You still have your valuation. It is the number of years it takes for you to pay commission on sale and recover that money back, and also commission on buy side. Ideally, the loss you are seeing in your portfolio plus commission of sale, which can be even the same day. It all depends on company performance at NSE. A share can rise within the same day. So it doesn't take the PE ratio as the number of years to recover your money. I hope now we will not have that misconception in NSE, because then it would mean all shares you are buying, it would take forever, maybe even 10, 20 years to get your money back. Remember, when you invest, unless company goes to zero valuation, you don't lose your money. So as long as the company is listed and trading, it only takes enough time to recover the loss shown on your account plus cost of sale, because it is not factored in your portfolio valuation. So PE ratio is just a valuation tool. It is used by research teams. It's not a payback period. It does not include future growth. The only formula that you can use to determine payback period is one that caters for future growth. But do we know future growth? No. We don't know what will happen to Safaricom in the next 1 week. They might come up with another innovation which pushes demand. So, ideally, a lower or higher PS, you must compare within its context. It's not a payback period. Then where do you get this data? First of all, market reports and research reports. Most brokers give you these. I think AIB Access give you Excel with that data. However, let's go to stockanalysis.com. It is there. Tradeview.com, I know it's there. Yahoo Finance, I'm not sure whether NSE data is there. And FinViz. FinViz is for international market. I'll show you tomorrow how to get the valued stocks in international markets. You can also get this data from financial statements, because you only need to get profit and total number of shares, which you get from company financial statements. Then you have the current price at NSE. You use that. And it must be the latest financial results. Ideally, if you're calculating right now, you're using December's financial results, because most of the companies, they are reporting those. In April, they might be reporting quarter results, April, May, June there. So you can also use that for valuation, but then you use the current price. In these sites, the data is already calculated for you. You don't need to now to use company financials. Your focus is on interpreting, not calculating. So when you use stock analysis trade view, your work is to interpret. You are not calculating. However, if you want to calculate now, you use company financials. And I've told you what to do. Get the profit after tax. It is there in the P&L. Get the total number of shares. You can get that in the comment section. Once you divide profit by total number of shares, you get earnings per share. You come and take current price. You divide now by the figure that you have calculated. It gives you PE ratio. It's that simple. It's not a complicated formula. Only that right now it's being misused in the market to misinterpret stocks. And the reason why I'm saying this, people are taking advantage of us because we don't understand how the market works. They'll come and tell you this share is undervalued, come and buy, but who is selling? That's why you need online portal to know who is selling. Is it a foreigner or a local fund? If it is a local, then you need to be very careful. It is your own MP who is buying from you. Who is selling to you? Which is the most unfortunate thing, because people are taking advantage of others. NSE, you'll be taken advantage if you're not careful. You will never see them buy and sell shares. They use accounts we call nominee accounts. So you never tell whether Honorable Didinyora is buying or selling. So this is stockanalysis.com. Let me go to home, because when you open it looks like this. They also have an app which you can download. You need to come here and search for Safaricom or any NSE shares. You click on it. There is this icon for calendar with the name Kenya. You click on Kenya. That way it gives you all the stocks at NSE. You have 61 stocks. If you go to performance, let me add, you may need to add some of the indicators here. So you go to indicators, if you're on overview, you can add them. I like, as you can see, I'm logged in. I've created an account. You don't need to create an account. The reason why I'm created mine, I'll show you, is because of watch list, managing my stocks off the broker platform because of international markets. So if you come to indicators, you can add them. They should be down here. PE ratio, it is locked. You may need a paid account. Then you have earnings per share. It should be somewhere. EPS. Yeah, it is there. If you have a pro account. Let's go to tradeview.com. They also have that data. For stock analysis, you need a pro account, but I don't know why they locked it. Initially, it used to be on the free account. Let me see if I was able to add it somewhere. Edit to view. You may need a pro account. Let's go to tradeview.com. Let me stop sharing. I share the screen. Tradeview.com. I'm waiting for it to load, then I share the screen. Tradeview. NSC. Let me share screen. It's this one. Not sure whether I've shared the right one. Let me mix them together. Where is this? I want to add it on that screen. Let me share now the right screen. So for stockanalysis.com pro account, let's see at the tradeview.com. You only need to come in. Again, you can search for the stock here, ESCOM. It will give you. You only need to be sure it is the right stock. Just click on the stock you are looking for. Down. Usually have those indicators. EPS. So the fundamentals. This will just give you the basic. Again, it will require you to have an account. I don't want to join in. Let's see whether we can get this from Yahoo. Yahoo Finance, I'm not sure whether they have access to NSC data. ESCOM, NSC. And for this one, Yahoo Finance, you can only get news. I don't think they have that information. But TradeView and stock analysis, you need calculate. You need a pro account. However, if you're in AIB's WhatsApp channel, they usually share, I think, daily watch list that has the pre-calculated data. For them, they use the latest results. They calculate for you. Share that tabular table. Maybe next Saturday we'll go through it. because I know that time we'll have a few updated. So you don't need to calculate it yourself. I think there are those who have reached out. How do I calculate it? AIB have done for you, but you have seen the formula. First, calculate earning per share. That is profit after tax, divide by the number of shares. Then whatever figure you get, you divide the current price. So that gives you price to earning ratio. I don't want to go into details, but then how you use them, they just help you to evaluate stocks before buying. Even dividend yield, it helps you. If you are buying, you have seen how to calculate. Also, if you hold shares, it helps you to gauge, do I sell or do I add more? And you don't use one only. You can't use a P ratio only. You use them together. That's why you find if you are talking to a research person, they'll try and use all these amongst other valuation formula, because there is also PEG ratio, that is price to earning to growth ratio. And also compare these within the same sector. I don't want to go into details because of time. I also want us to go through the boards. Let me see time. Okay. Let's go quickly through interpreting this, then we go to boards trading. So for dividend yield, it shows the income you're earning from holding your stock in terms of dividends, because you're not selling. Dividend is free money you're getting in. So if you divide that with the average price, you can tell how much you're earning in terms of percentage. The higher the yield, it means the more the income you're getting. But again, it may also indicate some risks. If the yield is too high, remember you're dividing dividend by price, it means that stock price is either low or the dividend they are paying is way high, which could be a risk. Maybe the company may not sustain that dividend. That's why you also need to combine with other valuation formula to see if that company performance can still stand. So again, you also compare with the history. Has this share been giving such dividend? If it is too high, then you may need to recheck your portfolio and maybe rebalance. If you are getting in, you may need to know, is it sustainable? If it is not sustainable, then there is no point of holding on that share. For earning per share, it shows you how much profit a company makes per share. So higher EPS means a profitable company, but again, you also need to look for other signs. A declining EPS may signal a problem with the company. So at that point, you may need to know what is affecting this company performance. Remember, it's profits per share you are checking. Then EPA, that is on EPS, we come to price to earning ratio. It only shows you how expensive or cheap a stock is. It will never tell you the number of years it takes to return your money. Low EPS, low PE ratio, stock may be undervalued, or it is weak in growth. So you may need also to check other fundamentals before you get in. A company may be undervalued, but it is underperforming. Then we have high PE ratio. Company may be overvalued, or there is a high growth expected. So always check. So again, that is on interpretation. We come to good portfolio. A good stock, before you add it into your portfolio, it needs to have a reasonable price to earning ratio, a growing EPS, earning per share, and a stable dividend yield. Because the worst thing you want is to buy a share because dividend yield is high, but maybe the company is winding up. They have just sold the assets they are paying out, or they have been paid reimbursement, like what happened with Umeme, and you are running to buy because of high dividend yield, but in a long run, you find you are locked at a loss. So always combine these formulas. Valuation, we have price to earning. There is also PEG, price to earning to growth, and there are also others. You also check profitability using earnings per share. Then income, you use dividend yield. We'll come to this next Saturday. I don't want to go into details. Then we come to dividend season. We are in dividend season. When you receive your dividends, what do you do with them? You need to reinvest back. So when you're investing and you're buying shares that give dividend, first focus on regular income from your investment. Get shares which give regular dividend and good dividend. Have them in your portfolio. Those companies giving consistent dividend, regular dividend, and good dividend. You don't want to buy a share because it is giving 0.1 dividend and price is low. Remember, you need a lot of shares for you to make gains. Where another company is giving huge dividend, yet you can buy maybe 100 shares of it and get that dividend. That dividend, when you receive, remember it is free income. Return it back. Buy more shares. That contributes to long-term growth. For the first time, if you're a first-time investor, enjoy the first dividend so that it gives you that motivation. Then the next one, come in, the investor, grow your portfolio. Ideally, you'll be building your portfolio from a passive income. At one point, you may find the dividends themselves, they help you grow your portfolio. For dividends, remember you are being paid for holding shares. There is nothing you are selling. When companies announce, you receive dividend. The way they work, company makes profit, they decide to share with you without selling. And they are based on the number of shares, not on the price, number of shares. So when you're buying dividend stocks, always make sure you have enough stocks. Take dividends that have been paid in past, multiply by the number of shares you'd want to hold, see if it is something you'd want to hold. What does that mean? Before you spread your small amounts, it's so many stocks. Always check, am I buying dividend stocks? The lower the number of shares, the lower the dividend. Remember, if you're receiving bank, there is also bank charges. So always work on building the number of shares you own for any dividend stock. Before building the next one, if you want to invest in BAT, buy up to 100. You already have 6,000 coming in. Go to another stock like equity. It's giving 5 shillings. Build it to 1,000. That is 5,000. Go to another stock like Stanbic. It is giving around 23 shillings. Buy, say 30. That is 6,000. If you combine all those stocks, you are getting regularly around how much? It could be even close to 15,000. Just as pure dividend. And why do you need to build it like that? Remember, tomorrow BAT can wake up and say we are not giving dividend. What if you had invested in BAT alone? Euros. That's why you need to build your portfolio slowly to substantial number of shares that give you good dividend. Then move to another one. Hold enough stocks based on your investment amount. Don't try to buy BAT 1 share, Equity 1 share, Safaricom 1 share. You are spreading those small amounts while you can just buy one stock that will give you good dividend, which you can use to buy the next dividend. So the more the number of shares, the higher the income. Reinvest that dividend for growth. You are using a free money to buy another free money. Over time, you find you have reinvested very well and grown your portfolio to a point where you don't even need now to buy more shares. You are using now dividends to pay your bills. That's what the investment means. Now we come to building a 10 stock portfolio. This you can build if you have substantial amounts. If you are starting with small amounts, start with 1 or 2 shares. First build those 2 shares to a point where they are giving you good dividend before adding the third one. If you're investing, let's say 1,000 or 100 every month, there is no point of buying even 2 stocks. Buy 1 stock regularly. Build it up to some good number of shares. If you're investing 1,000, again, first build 1 stock. If you're using 10,000, that time you can take 2 stocks, but build them properly to some good amount, number of shares. If you're investing 100,000, then that time you can decide, let me put just 3 stocks. Build them with my monthly 100,000 until I build some good number shares. Then use these dividends now to build the next one, to add the fourth one. Then when you're splitting after maybe 1 year, you have built a good 3 stocks, you can add the fourth one, build it to substantial all the way to a point where you have a good portfolio that is giving you good money. However, I've seen scenarios where most investors, you have stocks, yes, different stocks, but you want to trim them down. Always ask yourself, how much dividend am I received from these stocks? If they are giving you good dividend, all of them, don't trim down. Only trim the stocks that are not giving you dividend, because then you're holding them when they are not giving you any gains. If prices have stagnated for a long time, you only need to look at the future of this company. Do I need to continue holding this stock? Like housing finance, prices have stagnated to some level. I've never seen them announce a dividend. So would you want to hold it? That share you are holding for capital gains. Immediately you're in the profit, sell it off. So then, if you're able to build a good portfolio, let's say you want to hold 10 stocks. A good structure is where you have some 3 good dividend stocks, and maybe the other 7 are growth stocks. What does that mean? 3 shares that are giving you very high dividend. BAT, Stanbic, Stanchart. You close that game. You come to growth stocks. These are stocks that are able to move in prices. You have Safaricom, Absa, Ad Coop. Come and buy EABR when prices have dropped. Buy WTK. Buy Capchorwa. Because those are discounted. Then you come the 7th one, you can decide this time I can take DTB, but that price is high, I can go to equity because the price have dropped, or I can go to KCB because the price have dropped. You have your 10 good stocks. Remember all these stocks I've talked about, all of them they are giving you dividend. If you have grown them to some good level, maybe over 1,000 each, whatever dividend comes in, you can add even the 11th one. Nothing stops you from holding many stocks at NSE. I know the fear comes in terms of how do I manage this portfolio. The broker will give you a new portfolio valuation. You have stockanalysis.com, which you can use to manage your stocks very well. You only need to peep in on your portfolio once in a while. Check whichever have made good profits. Prices maybe they are way too high. Those ones you can trim, wait for prices to go down. Why am I saying this? If you buy 5 stocks and maybe you are in bank sector and it is affected, remember you serve until that sector rises up. Nothing stops. There are investors who hold nearly everything apart from penny stocks. They hold stocks that give good dividend and which move in price without speculation. So in terms of portfolio building, we'll come to it next week, where now I'll show you with different amounts how can you create a structured portfolio that gives you value. Because again, if you're splitting maybe 1,000 into 5 or 2 stocks, remember you're rolling your dividend. Bank is waiting for you. That time you want to move your dividend to M-Pesa. So that's on building stock. Let's see. Let's briefly go through boards because it's just a quick introduction. Then we come to Q&A. If I'm not able to finish, we can do now account opening for CBK tomorrow so that I'm able to cover Q&A with the remaining 1 hour. Let's go to the boards. So now we have moved to shares. So that's one investment we have talked about. Buying dividend and growth stocks. We have seen it here. Dividend stocks, always have a dividend stock, a good strong dividend stock. And let me show you on stock analysis because I usually use it a lot. Let me see where I've opened it. Let me go back to the screen I have for online trading. Again, you don't need to calculate all these. Stockanalysis.com has given you everything. It's only that mine, I've already created account, selected NSE shares. You only need again to come, even you can search for NSE. NSE Kenya. Let me see if it can give us. It is here, Nairobi Securities. The share that opens, click on the word Kenya. It gives you the list of stocks. You only need to come to column for dividends. It will load everything. I think they have not added the dividends for this year. Oh, it is there. So some are this year, some are previous year. You can filter with the ex-dividend date. It gives you even the dates you need to have bought. The ex-dividend date is 1 day after book closure. Like because you need to have shares by 1st of June. No? So you only remove 1 day from ex-dividend. So for those who have been asking, where do I get dividend dates? It is there. Even yield based on current price. Remember, this is based on current price. Even in terms of growth, you can be able to tell whether dividend is declining or increasing. So you only need to come and arrange by dividend and decide which out of the top, maybe let's say, depending on the amount, because again, it also depends on the price you're buying. Let's see if we can add price on this column, stock price. You can add it based on the price. Let me drag it to dividend. Based on the price, because again, you don't want to squeeze yourself. You can decide, remove umeme, remove it from the list. Based on the prices, which share am I able to buy? If I don't have enough money, I can decide I'll concentrate on equity and CBA, either one of them, or I can come down, pick KCB, dividend is 4 shilling, and build on those stocks. If I have enough money, then I can decide, let me pick BAT because the dividend is high. So you have one strong dividend stock as you build another growth stock. If you have enough money, then you can decide BAT, Stanbic, Stanchart. Let me have them in my portfolio, or even Jubilee. Then from the rest of the list, I check the ones which have price growth potential in terms of, can I buy low and sell high? That you can always go at your price. There is a way you can add these columns so that you're able to know how it has staged even for the last 1 week, last 1 month. You can always add those indicators here and play around with the prices and see which ones you're able to make money. Like these ones, the change is based on the previous day. You only need to arrange them and see which stock have dropped in price, because then that gives you an opportunity to get in. But exempt penny stocks. Don't go for penny stocks. Penny stocks you lose. I would start here where there is DTK, Sassini, it's a T. If it gives you dividend, you can consider it. But these are stocks. Look at the change. The ones which have dropped, they gives you an opportunity of price growth. We'll come to all these next week. Let's get into boards. If time allows, we can go through CBK portal. Yes, CBK portal. Let me stop sharing. I come to Q&A. Right now, don't put questions on the chat. I will allow you unmute at the end. And for those who are dropping, that's my WhatsApp number, 0723 384 775, in case you want to reach out. So let's go through Q&A. The first one I think I'd already answered. So what is the fee of trading off the market and how does it compare with trading via GTD, day or IOC? In terms of commissions, nothing change. Costs don't change. You can't trade off the market. All trades have to go through NSE trading system. It's only that you as a retail investor, you go through a trading platform where you can trade on your own. Pension and foreigners, they go through a trader who is placing the same in NSE system, so the orders match at NSE. There is no separate way of trading off the market unless it is where the shareholders, like what government and Vodacom, they are doing. That one will not go through the normal market trading board. They will go through a separate board. It is a trade that will be executed, but of the main trading system. Preference shares, that one I talked about. As it says, the people who hold preference shares, they are paid dividend first before the others. But it doesn't mean they are paid a separate dividend. It's the same dividend amount, only that they are paid earlier. But now, with the way dividends are paid, everybody receives the dividend the same day. The only disadvantage of preference shares is getting somebody to sell or somebody to buy from. They trade same as if it is KPLC, you see KPLC preference share 4 and also 7. But I would advise don't go for them. There is no advantage in the current NSE market. Dividends eventually will be paid. I bought my first stock using market order. These trainings are very helpful. Thank you very much, and I will be doing more. It's only that week I got so many requests from the clients trying to understand what is happening in the market. That's why I have not been able to post. But I would really like you understand some of these products in NSE. Could you demonstrate how to adjust an order to a lower price from previous one? You saw me where I went and clicked modify. You just put a lower price, modify that order, that's it. Leave it in the market. The only thing you can't change is the other details. You can only change price and quantity. If you want to change the other details, cancel the order completely, place a fresh one. Talk about the difference between delivery and intraday for a new trader. Delivery is where you buy today, you can only sell on T+3. Intraday is where you can buy and sell today, but if you have not managed to sell the same day, the following day you are not able to sell. That is why it is intraday, same day. The following day it is reverts. Your buy order reverts to normal settlement. Do you do intraday buy and intraday sell at the same time? Not really. You have to wait for one to execute because you need to have shares to sell. So you need to do an intra buy if you are new in the market. Then whatever you buy, you sell after that order have executed. If you already have shares, you can start with a sell, then you buy back. Remember, intraday assumes you are selling what you have bought that day. So if you already have shares, you can even start with selling, then you buy back. However, you can do, if you already have shares, you can start with a buy, then you do a sale. But remember price movement. The only mistake you can make is to place a buy order and a sale order at the same price and you're executing amongst yourself. Maybe you have identified a gap in between the price you put a buy at one price and the same price is what you're selling. You put the orders, they match. Remember, you're buying and selling to yourself, which is called self-trade. That is not allowed at NSE. That's why you need to buy, wait for it to reflect, then you sell back. Intraday makes more sense when trading forex. Stocks are mostly for investing since they are slow moving assets. Yes, at NSE. But again, I've said GLD is a good stock and BAT and SMWF. The rest, keep off intraday. You won't make any money. And for this, you have to start with a sale. You need to have the shares. You sell at a high price, then you target to buy at lower price. If you're targeting to buy, then you have to pray very hard to make sure the market goes up the same day. So for NSE, it might be tricky. It's only those three: GRD, SMWF, and BAT. How does one set dividend mode to M-Pesa? When opening account, that is the only time you as the client you're able to select. Immediately the account is opened, you can only use a manual form, a CDSE form, fill in your personal details, and then the dividend disposal mode. Let me share that form here. I guide you on how to fill in. I've already shared the form on my WhatsApp groups. I will also share on other social media accounts, so that for those who are not on those groups, they can also get advantage of that form. Let me see if I can get it. CDSC amendment form. It is here. So stop sharing. Let me share. You can even download this from CDSC website. It is CDSC 1B form. It is amendment. So what you need is to put your CDSC number. Don't struggle with CDA code if you don't know. Your broker will put only your CDSC number. You can get that on the online portal under FADS, and also on the app. You go to FADS, you click deposit, you see your CDSC number there, or you check on any of your emails you have received from the broker. Then fill in these details, existing details, just the first part where it says for individual, joint or minor, just the first part. If you have a corporate, that's when you fill in the details below it. So for individual, joint, you fill in the first part. Then you scroll down, ignore the rest. You got where there is payment. You're not changing the others. You're only changing dividend disposal. It is somewhere here in page, is it page 3? Not page 3. Page 2. Yeah, page 2, you go to payment details, dividend disposal. If you're changing from bank to M-Pesa, you click mobile money. Then you put your mobile money number where it says mobile operator. You put, if it is Safaricom, then the phone number. I'm not sure whether they allow Airtel. I would highly discourage Airtel, even if it is allowed, because you may have issues. Maybe operators who don't pay through Airtel. So you click mobile money payments, put mobile operator as Safaricom, then your mobile number. Don't tick bank or international bank. If you are changing from M-Pesa to bank, then you tick domestic bank, then you put in your bank details. If you are changing from M-Pesa or domestic to international banks, then you tick international, then you put your bank details. Don't put two. Don't put domestic and mobile money. That form will be rejected by CDSC because they don't know which to put in their system. They only have one option, either mobile money, international bank, or domestic bank or check. They don't have any other option. So don't pick two. So if you're changing from bank to M-Pesa, click mobile money, fill in your details for mobile money, then phone number, then scroll down to where there is a declaration. It's down here. You sign. Put your name, you sign, date, and scan back. Attach your ID number. That's it. Wait for the CDSC to process. It takes some time because these are manual process. So you give CDSC some time. They will either call you. If they realize you are changing to a number that is not registered under you, they will definitely call you to confirm. But make sure your broker have captured. So you can get this form from CDSC website or request your broker to send. Send to their email address. Wait for them to process. It will automatically change. So in the next dividend, the registrar should pay you with a new mode. In the current financial year, if they have already declared and announced that, you have to write, even if you have made changes, send the same form to the registrar to update their records. Registrar image, they will send you a form so that they amend the records. They have until they receive the new register from CDSC. And now you start receiving dividend from the new mode. Never be worried about dividend which have not been paid. It is still with the registrar. You only need to write them a polite email. They will eventually pay you. Attach your ID, or you visit them physically if you are able. The worst that can happen is after 10 years, you are not able to claim your dividend. It is taken to unclaimed assets. There, you only need to go and write a letter to them. So for those who have not been able to be paid via M-Pesa, I think Equity Bank, I've had people complain it doesn't pay. But if you reach to them, they will eventually pay. If they don't pay, just send that to CMA and copy Equity. They will even pay you the same day. If they don't pay you, they will send it to unclaimed assets. Unclaimed assets, they can pay you on M-Pesa. So never be worried. Don't fail to buy shares codes. Registrar is not paying through a certain mode. You buy. Let them fail to pay. It is a market. It has regulations. In terms of foreign investors, I think these have explained even where to get. You start with market statistics. See whether they are the net sellers in the market. If they are the net sellers, it means they are selling. check the following day, are they still the net sellers? If 1 week they have been the net sellers, then they are getting out. But if today they are net sellers, tomorrow they are the net buyers, it means they sold one share to buy another. That's why now comparing that with the total market turnover helps you to know whether it is local pension funds, like what have happened this week. It's purely local pension funds. Hopefully they have finished. We see this week now shares are starting to move up. Online portal, or to see the views, that is broker specific. For AIB, you can get on our website. Even other brokers I know they have put on their website. It's the online trading link for brokers. If it is stockanalysis.com, allow me to finish, because once I scroll this, it might clear. I'll share at the head. There is stockanalysis.com. There is tradeview.com. The others, I'm not sure whether they have an SC. I may need to check. That is Yahoo Finance, and another one called FinVis. Those are some of the sites I use for international markets. WTK and Capchorwa not part of the same corporate group. Williamson T owns Capchorwa. Williamson T owns Capchorwa. So if Capchorwa is paying dividend, Williamson T gets dividend from Capchorwa. That's why you see Capchorwa paying high dividends. Also Capchorwa, their operations, they don't have so much expenses compared to WTK. Capchorwa is just a small company. That's why they're able to pay dividends. Williamson Tea is a very huge company. I think it is also owned by Gong. Is it Gong Tea Factory or something? Then that company is owned by now the main Williamson Tea. So Williamson Tea through Gong owns Williamson Tea in Kenya, which owns Capchorwa. So if Capchorwa is making money, no Williamson Tea will receive part of dividend. In terms of operations, Williamson Tea is weak because its company is the biggest one. Capchorwa is just a small one, doesn't have much of expenses. And the question continues, if so, what explains the divergence in their market pricing? I think I've explained. Capchorwa is a small company, shares, the free float is small, so demand pushes the prices up. Williamson is a huge company owned by many investors. Remember, even Williamson Tea owns Capchorwa, part of it. I think, is it that 5%? So 65% is what is left to us. Remember, there are also other investors. So that price movement pushes the price of Capchorwa up. It is able to move. Williamson Tea, the price is way low because it's the one people, most investors buy in the market. So they are able to play the prices. Demand and supply, is able to push the prices down. In terms of dividend, Capchorwa, again, it doesn't have much of expenses. So profits are high. They are able to pay everyone high dividends. But remember, part of the dividend comes to Williamson Tea. Williamson Tea has so many investors. So their dividend is also low because dividend is profit divided by a number of shares. The profit they decide to share. Hopefully I've answered your question, but I'm doing a video because I've seen people are trying to run away from the shares that are giving you opportunity. Williamson Tea have said bonus dilution gave you a very huge opportunity. If you buy right now at 130 something, it goes back to 300, double the price. You only need to be patient. The same thing with Capchorwa. During that period, you have taken your dividends. So you identify opportunities when they last. Safaricom, I said, government is controlling this price. And you can tell on Friday, they actually control that price doesn't fall below a certain price and doesn't go above a certain price. That is above 30 and below 28. They made sure it is stable at around 29. Because if it drops, then why would Vodacom buy shares directly from government when they can buy from the market? Government have to make sure this deal goes through. It gives you an opportunity. This share dropped from 41 to 34 to where it is because of this deal. The next time, you only need now to get into Safaricom now. When prices go up, don't even think about dividend. If it goes 40, 50s, that time you are free to take your profits. But if Vodacom are buying this stock at one point, it might start even giving much of dividend out when they stop expanding out. Would you recommend incorporating withholding tax when calculating dividend yield in the Excel? Yes. Remember, there are two things I've not factored. There is withholding tax because the amount you are receiving is less withholding tax. Then there is bank charges. You need to also factor that. That will help you now know is that this dividend that I'm receiving was holding the shares. Then on the profit, you factor out cost of sale, that is commissions and levies. Now you have the correct figures to compare. Profit against dividend. How is mystocks.com? They fetch data from NSE. It also has some of the information from NSE. The only thing they subject you is you pay annual subscription fee. They are the ones who have developed Dozika app, and they also have their own app. You can use it if they allow you to use the free version. If they don't allow you, then the best thing you can do, just use the broker platform. It's also good. But my stocks, and also I think there are also other data vendors from NSE who have this data, which you're able to get, like Bloomberg. I know they do it. How do I join AIB WhatsApp? If it is the WhatsApp which they share research materials, just share your number with me. My WhatsApp number is there on the screen. I will send to our research team to add you. I will also share their link once I receive from them. Because those groups are also feeding quickly. Once I get the new link, I will share with you. Much appreciated for the information. It would be good to go into one topic deeply. Too much information as a beginner is too overwhelming. I actually want to break these trainings. It's because I've covered, if you notice, this is which session? I think we are in the 20th for NSE. NSE, I usually break those videos in small, but still I need to break even further. The reason why I do it this way, there are people who have been following these trainings. For them, they quickly understand. But now as a beginner, you may need now to catch up slowly. In the next trainings, because now I've already done the beginner training, understanding the NSE and training, I will now go deep into each and then also break products. I don't want to cover them together. It's only that for boards I felt there are people who wanted to understand the boards part. I will also cover tomorrow how to open a CBK account so that they can proceed to invest. But now I should be able to break it down. Also the videos on my YouTube and also TikTok, I'll try also now to break them in a way you're able to go through them. Why different brokers are giving different stock analysis for stocks while using same financial results of same stock? Where should I get correct information? That is the reason I covered the basics of valuation. The reason is, and apologies for giving you this, if you have already used that information, it is an individual who is doing this research. One is using financial results for last quarter, not even full financial year. There is one who is using full financial year audited results. There is one who is using interim results. There is one who have gotten maybe February, we are in March. Yeah, February performance of a bank or a stock. All of them, they will use different profits or loss positions. There are those who, even if they are using the same results, maybe full year results for last year, there is one who will use pricing as of today. There is one who you decide, because this is for last year, they use the price for December. They will give different valuations. That's why you need stockanalysis.com. That's why you also need to do your own valuation. But remember, for valuation, it's only if you are too technical. If you are a beginner, you just think about profits in my portfolio against dividend. You make good decisions. Also, prices, are they too high? What is happening in that company? But for brokers, I know they are also, and apologies for this, there are those who are using ChatGPT. Sorry to tell you that. And I would challenge you, go to ChatGPT, take a valuation, financial results for a company, upload it in ChatGPT, tell it to get you for you PE ratio. Also ask it, interpret this for me. ChatGPT will do a very good interpretation. So for them, there are those who do it, then they come read through it, adjust mistakes which ChatGPT may make, and that forms a report. So for you to get a good report, I would ask, try to do on your own, because these are simple valuations. Check with what the brokers have given you. Then you can pay boards through M-Pesa for lower amounts. I've not seen this. Maybe for primary it allows if it is not a government board. Corporate boards, you can pay M-Pesa, you can pay through bank. That is allowed. For corporate boards, because you're paying through CBK, the reason is, remember you are bidding. You may utilize your M-Pesa money. If you're in bank, remember CBK will debit money from your bank. For corporate, for government boards, I've never seen M-Pesa unless they introduce Retro. You pay through bank. But I will also check, because the minimum amount is 50,000 for government boards. For corporate boards, because of Safaricom, it is 10,000. Is there a way of checking where my dividend will be paid through AIB portal? That is not shown, because again, we don't know who is accessing your account to show you the bank details. That you can only check through a broker. Broker will tell you, because they need to check CDSC platform. Bank details are in CDSC platform. The broker is able to check that. We should be able to share that with you. You can always call a broker. If you're in the AIB, you can always reach out. I'm happy to help you. My Safaricom line is suspended and I'm unable to receive M-Pesa transaction. Is it possible to change dividend payment from my M-Pesa number to an M-Pesa number that is not registered under my name? That's not possible. Because that M-Pesa, if it is registered to another ID, then you'll not be paid. Remember the registrar, you said your number, your ID, and the money to Safaricom. Safaricom will check. Your number is registered to this ID? Yes. Submit. If it's not, it is rejected. The best thing you can do, register another number. I think it's very easy. Register another number, use it, or you change to bank for now. To bank, or you give your PO box, they said via check, which I would highly discourage. It's better bank, because ideally you also take that check to bank for clearing. How does one join your WhatsApp group? Let me share that link. Let me see if I can share that right now. That's for WhatsApp group, and also YouTube channel, Gentus Found. All these are free. So when you join, there is nothing you're paying. Let me share. That is the YouTube channel. Let me share the new WhatsApp group. They are feeding very fast. So when you join that group, you have an option of joining international markets or NSE. It is you as the client to decide which you want to join. If you don't want to join the groups themselves, you just want to see notifications, just join the community. So you join the community. From the community, you can join the group. So within the community, nobody sees your number apart from the admin. Within the group, because that's where now you are discussing, people may be able to see your number. Let me see if I can get it quickly. As I wait for that to load, let me see the other question. Don't share more questions. I want to enable now Q&A where you can unmute. Just double checking from ABSA chart 1 year analysis, the price may fall to 19. I just want to know if I'm interpreting correctly. Not really, the market last week was, this week, it was pure pension funds are selling out. It may not drop to that price. It may even appreciate this week. Remember, when they sell, they come back. It may appreciate, but let's see how it opens on Monday, because Monday will tell. If prices starts to go up, then chances of going to 19 are slim. And also remember, foreigners are coming in to buy ABSA. It was added to MSCI Frontier Index that is used by foreigners to invest. For them, they invest based on performance of shares within that index. ABSA being part of it, expect them to buy more, because ideally they didn't have ABSA shares. So they will start buying, create demand. And remember what we said, high demand, prices go up. So for ABSA, 19 maybe on a lower side. I wouldn't comment on it right now. Let's wait and see how it opens on Monday. Oh, it's already on 19. Let me see. Because that may mean, let me see. I'm just logging into online portal just to confirm the price. It's not 19, it is 27. ABSA is 27. Let me share this screen. Because maybe we are having two shares. I would have been worried. 19, that would be very low. Let's go to ABSA. I'm just sharing that screen. That's why you need access to either online portal. I wish NSE could return stock analysis graph, because it can help. As you can see, I'm on ABSA. The graph here on this side is trading at 27. Going to 19, even for the last 1 month, it has never gone to 19. 3 months, even 6 months, maybe 1 year. That's when it was 19. For prices to go way to where it was for the last 1 year, it will take, I don't know, maybe something happening in the market, unless we introduce another finance bill that affects the market and foreigners starts to move out. I don't see these shares going back to those prices. The best thing ABSA can do is revert back to its 30. What does that tell you? You have an opportunity now of getting these shares at lower prices. Most of them, even Akina Equity. Where is it? Equity. If you look at 1 month, it has traded 80. Right now it's 70. That's a difference of around 10 shillings in terms of gains if you're buying right now. Let's go to DTB, the one Didinyora have been telling us to buy. It's dropping. Yeah, DTB, this one, I don't think there is any opportunity. 146, let it drop further. Because ideally at high prices, it is them who are selling to you. But they come and spike the market, you buy, they sell. They wait for the prices to drop, they come and buy back. What you only need to do, like ABSA, it is the first one. You look at the foreigners, 58 against 432. They were selling. But again, if you look at the turnover, it means much of the trade is ROCO driven. You only, let me hide that. It's turnover. Let me see if I can zoom this out. The column for turnover, you take the total foreign buy, total foreign sell, you get the total, you subtract from turnover. So turnover minus total foreign buy and sells. It will tell you who is buying and selling. Like now, there is a share here, 56, which I don't have foreigners, which is purely local. It is the first one, it's Britam. Meaning, fund managers and pension funds who had invested in Britam have already sold off. Taken the profits, they bought at a low price. Let's see what price they bought at. They may have bought at a very low prices. Yeah, when it was 9, now they are taking profits at 13. Because they know Britam doesn't give profits. It is insurance. They might announce reduced profits. They may not give dividend. Basically, they take profits to reallocate those profits in terms of interest. I think I explained this. And that's what has been happening in NSE. Only that, as I said earlier, NSE themselves, they usually have the data, the prices. CDSC, they have the shares. None can see what is happening in the market. Who can see in the market? It is the broker. They can tell this client is the one who is selling this share. So if the brokers are telling you foreigners are moving, that time be sure it is foreigners who are moving, because they can see who is selling. And the market, let me shock you, it can be moved by one trader. If this trader is trading with two fund managers, they can move that price around. If it is showing 19, maybe you have put Fourier. It's because you have put Fourier. That's why it's showing that. Just try to limit to 1 day or 1 month. Will you at a future stage incorporate coverage of fractional trading via third-party platforms like Scope Markets? That I'm doing tomorrow for international markets. International markets, I will help you open real account now, live account on Scope, demo account, and show you how to trade on fractional shares. Because that's where you can trade. Also, IBKR, interactive brokers, for those who have already opened, I'll show you how you can place those orders. The only disadvantage of interactive brokers is the banks. They charge a lot of money to transfer, to do Swift transfer. But there is a way you can pay through M-Pesa. That is M-Pesa to PayPal, PayPal to Wise, Wise to IBKR. But that process you may find you're also paying. I need to confirm the charges through that process. Once I confirm that, then that will be the easiest route to get to IBKR. IBKR is good if you are buying stocks with a huge amount of money, because then the Swift charges justify that. Scope is for small amounts. Remy, I think I've shared the links. Let me enable, instead of us going through the chat, we see if you can unmute yourself. Remember, for those who want to drop, you can always support this free education. Bring as many people to that WhatsApp group. Share it with your groups, let them join. What my YouTube channel, TikTok videos, there is none which is behind pay. There is none under membership. There is nowhere anyone is paying. Those videos, they are free. Let them run. Help other people invest. I will also be coming live on TikTok. It's only that I didn't manage to connect my phone. I would have done this live training both on Teams and also TikTok, so that at least these trainings get to as many people as possible. So if you're able to support, you can support through that number. So the floor is open. Just unmute yourself, ask the question. The floor is open. There's somebody who had unmuted. Let me see. You can just unmute, ask the question.
Hi, Peter. I first want to start by appreciating these forums. So my question is, how do you assist, how would AIB assist people who bought low volumes, especially for the corporate bonds for EABL and Safaricom, to exit the market?
For those ones, we have a board dealer who can execute that trade for you. You can reach out on my WhatsApp number. I will share his contact. I know for him he's able to sell for you even with the raw amount. There are those who, unfortunately, who say I can only deal with a client with 1 million and above. But on AIB, we have a dealer who can help you execute a trade even below that. If you are willing to sell, just reach out on WhatsApp. I will share his number. Just reach out to him.
Okay, thank you.
The rest you can unmute. You can unmute. Robert.
Yes, Peter. Good afternoon, everyone. Peter, thank you very much for your training, and I wanted to know much about is it like when you go to like when they are selling these Eurobond, you notice that they are very high value. How can one buy like in small bits? There was that term you were using. What was it? And how can we buy it online?
Oh, for boards, if they are trading through the CBK platform, it means you have to go through a broker. A broker will source the seller for you. So usually there is a minimum amount for each board. If it is government board, it is usually 50,000. Then if you are buying above that, then you buy in multiples of 50. It's because if you buy 70, then if you are selling, you sell 50, you'll not be able to sell 20. So if you are willing to buy lower amounts than the 1 million I said, still the same board trader is able to do it for you. They don't charge anything because they are paid commission by the company. Hopefully I've answered that question, or maybe I'd asked in a different perspective. So if you're buying in small lots, those ones there's a trader, the same one who will be selling Safaricom and corporate boards. It's only that I don't want to share his number directly here. He is able to do that.
But he's here with AIP.
That is for government boards. You don't need to be with the AIB. Even if you are with another broker, the board at CBK, it is not tagged to a broker. So when you're selling, it's that trader will talk to CBK to provide that boards to them under their trading account. They will execute that trade for you. Then CBK will pay money directly to you. It doesn't go through the broker. So CBK will pay money directly to you.
Okay, thank you. I think you have answered me.
Okay, it's only for corporate boards which you need to trade with a broker, because then corporate board is at a CDS account, the normal CDS account. So at CDS it is tagged to a certain broker. There is Taylor. Hopefully I've spelled your name correctly.
Yes, thank you so much for this training. My question is more about your opinion. Is it worth investing in government bonds now? Because considering 2023, they were about 18.5. Right now, I see about 12 to 13%. Is it still worthwhile investing?
For government boards, I would try and compare 3 assets here: government boards, money market fund, and shares. Shares, if you look at them, the prices the way they are right now, they have still a high potential. You can make good money, both dividend and also in terms of capital gains. If you look at money market funds, special funds, right now they are giving some good returns. If you come to government boards, those rates, they are still low. If you are to ask me, because some of those boards, they usually charge withholding tax. Only infrastructure. If it is infrastructure board, then that you can go for, because the rate they tell you is what you get. If it is any other board, there is the withholding tax which eats into your I believe now you can hear me. Just confirm. Okay, let me enable. Yeah, you can unmute. So as I was saying, I think the question was on getting into boards considering their rates right now. The rates are they're still low if you have to ask me. If you have to compare what you'd get putting the same amount in special funds, the device going for special funds, if you don't have one, if you already have a special funds, then that time you can come to boards, because you don't want to expose yourself too much on shares. So shares, special funds, if you have that, now that time you can come to boards. Special funds, you can go for Mansa X. It has been there, and I've seen even their asset under management. The total portfolio they are holding is very good compared to Oxford. Oxford is just new. Maybe Oxford, you give it some time, you see how it grows. But nothing also stops you from going for Oxford. Mansa X, it's at the Standard Investment Bank, Oxford at the Faida. So you only need to weigh your options. Do you want to work with Faida or SIB? But again, Mansa X have been there. System have been tested. They have been paying out people who are withdrawing their interest. Rock period, both of them 6 months. In terms of starting, I think Mansa is 250,000 minimum. Oxford, I think, is it 500? So you only need to weigh. And the same amount is the same amount you would be bringing to board. Remember, this is paying you interest monthly, where board is paying you annually. It's just weighing. If you already have a special fund and shares, then come to boards. You have the third investment. Hopefully I've answered your question.
Yes, thank you.
Okay, welcome. Feel free to unmute. If you're not able to unmute, you can always leave the question on the chat. Etika special fund, still even that one, even Avocap, but consider what who is behind it. Who is the fund manager and who is the custodian? The reason why I'm saying Mansa and Oxford, because SIB and Faida are stockbroker at NLC, regulated by CMA. A stockbroker cannot be allowed to start a product that is not approved by the regulator. The others, they might start, then it is approved, but then you have seen what happened with the Cyton. There is one of their product, I think, which have a few issues, and they have clarified their position. But you see, immediately you lose confidence on an investor. That's it. Mansa X, ada broker, and the NSE. Oxford, ada broker at NSE. All of them, they have met minimum requirement for being a broker at NSE. So basically, if those two funds were to go down, it is tied to their balance sheet. It is the brokerage to be sold to pay you. So basically, that's why you are seeing most of these brokers coming up with buildings. So that in case of anything in those products, it's not the brokerage that is sold, it is the building to pay out the investors. You don't need to worry about some of these products. They invest in international markets. That's why I'm also happy to take you to international markets, so that wherever they are getting the gains, you also get them there. International markets, also NSE, part of the money, and also treasury bills and treasury boards. So for Avocap, just check who is the fund manager behind it, because that's the most important. Etika, who is the fund manager, who is managing the fund. The email address for sharing on amendments, maybe you can reach out on WhatsApp because it is an individual email. If you also want to send, you can send to info@aib.accessafrica.com. Let me see. You can share to that. There are some of staff members, they have access to that email now. You should be able to get a response. But also reach out on WhatsApp. I'll share one of our customer service email. You can send directly to them. You can unmute if you have a question.
Yes, good afternoon.
Afternoon to you.
Yes, I'm Peter.
Okay, welcome.
Yes, I'm about the trend market for this week has been dipping.
Okay.
Then on Friday, for the case of equity, there was gain.
Okay.
I tried an entry of 68.75, but never executed. For the next week, what are we expecting? Should I place at a lower range or at what? How much can I put so that it may be executed? Because the trend has been dipping for the last quite days.
Okay, for Equity Bank, if you look at what happened on Friday, because this is for Friday, the graph, you notice the lowest it went was 67.5. You put at 68 or 67.
At a 68.75.
You may have put your order maybe after, is it after 11 p.m. After 11 a.m. because I can see that time it executed at that price. What you can do,
Yes.
you can place a price of around 68 because that is a bit the lower it went. But then when it opens on Monday morning around 9:30, you check the first execution because that's the one that determines the price direction. No? If it executes at around 69 as the opening price, 69, that time you can even lower your price, but 68 would be an ideal price of entry. If the share doesn't continue to drop, you notice after 26th, it started to rise. There is a possibility the share price will go up because they have already announced a dividend. Most people would want to come in. And last week I've explained what happened. It is pension funds who are selling to take the profits. They allocate the interest. They will come back maybe from next week or from early April. So that time you see the prices going up. So for entry for equity, around 68 would be a good one with a GTD. Give it a GTD of the whole week. Then you watch how the prices react on Monday. But if you're also on those WhatsApp group, I'm happy to share that. You can also remind me on Monday. We check the price it opens with, then from there we can determine the direction. So that again, you don't put a low price, it doesn't execute, or you put a high price, then you realize the share is still going down. Because anything can happen on Monday.
Okay. Thank you.
You're welcome.
Can one change from one broker to another?
For changing a broker, yes. What you only need to do is, let's say you are with broker X, you want to come to AIB Access. You just download the AIB DigiTrader or you go to our online portal, open a CDSC account. It will ask you for existing account with another broker. You put the same, because it is the same CDSC number. You put that CDSC number. Submit your application. Once we are open, you only need now to go to broker X, request them for transfer form. Fill in, they stamp. Once they stamp, it confirms they have captured in CDSC system. They also stamp your ID, a copy of ID. They said actually a copy to you. You said that now to AIB Access. You pay just 200 shillings directly to CDSC. You're not paying the brokers. There is no charge to the broker. It is to CDSC, 200 shillings. The receiving broker, you said form together with now confirmation message that you have paid the 200. They will just accept the transfer, submit the forms to CDSC. Within 1 day, you'll actually see, 1 or 2 days, you see your portfolio valuation now in the new broker. And CDSC might call you to confirm if they realize maybe the email that is being used is from different investor. But if details are the same within the two brokerage, they just move the shares. So open account, go to the new you go to the existing broker, request for transfer form, you fill in. You can do that via email. Set them together with a copy of ID. They capture, stamp the ID, send both forms to the receiving broker, pay 200 to CDSC, send that message to the same broker. Now they will write a letter to CDSC to complete the transfer. And you don't need to close any account. You don't even need to go to the other broker to close because there is no account you are closing. CDSC account is the same across the brokers. So you just now continue trading with a new broker. Hopefully it is clear. There is another question. It appears automatically, but can one hold different accounts, Ama? You can still trade on the same account with the 10 brokers. Each broker have their own trades. I've seen most of high net worth, that's what they have done. You open one with the IB, one with another broker. But remember, the charges are different in terms of commissions and also other fees. You may need to also cross-check that. And also availability of the trading platform, both online and mobile, because you want to have as much independence as possible. Any other question? Just unmute, ask.
How safe is AIB as a trading platform? Can we just wake up one morning and it's not there?
Let me clarify in terms of who holds what. In terms of shares are held by CDSC. So CDSC are the ones who hold your shares. Then they allocate AIB or Suntra or Equity as the broker. So CDSC have the shares. Broker have the money. So broker, when you deposit money, it is with the broker in their bank account. When you buy shares, broker transfers money from them to CDSC. Then CDSC, they will credit your CDSC account. So what would happen if a broker goes down? As long as your money is in shares form, there is nowhere your shares go. Remember, you only need to go to CDSC, they transfer to another broker and you continue operating. So you only need to be worried if the broker have the cash. Now we come to AIB. All brokers are required to meet a minimum. A minimum as a broker, I think it is 50 million as a liquid capital. There is also other requirement in terms of assets. All brokers is at current, they have met that threshold. AIB is owned by a group of shareholders. Some of them are from Mauritius through Access Group. So it is owned by Access Group. We also have a few local shareholders. So as a client, you are fully protected because some of those shareholders are also within our office. So even if the company goes down, the same directors are within. You have seen a similar question on Suntra. Suntra, I may not know about their shareholding. That is their board composition. But in terms of working capital, liquid capital, they have met CMA requirements. Only be worried if a broker is flagged by CMA. You also saw our financials. We are in a very good profit, meaning the broker may not even try to play with your shares to make money. So for AIB Access, in terms of your shares, they are protected. Shares, I've said, they are with CDSC. It's only the cash that they hold. Always try as much as you can not to hold much of cash with a broker. If you can, maybe small amount that you can play with the market, but always make sure all your money is in share form because that is held by CDSC. In terms of trading platform, you are fully protected. I'm the one behind the platform, so I know it in and out. Only if you share your password with another person. But in terms of payment, we only pay to your bank or your mobile number. We don't pay any other person. If let's say maybe your spouse comes and sells your shares and they won't be paid, they cannot be paid. We only pay to the number that is registered there. And that number in M-Pesa have to be registered at the UID. Bank the same way. So in terms of finance, you are fully protected. In terms of trading, fully protected. For Suntra, I may not know. Okay, welcome. For Suntra, I may not be able to know.
May I just comment on why I was asking the question? There was a famous, I can't remember the name, about several years ago, a broker that was very famous, and we bought shares for Safaricom and I don't know what with them, and then they went under. And then
That
the
is
transfer
discount.
process. Discount, yes, discount securities. And then it took such a long time to be given like a different substitute
Broker.
for that. Yeah. And that is where my question is coming. So that in that period, a lot had happened. And now eventually when we got, I know people who still have not transferred from, they haven't gotten from discount securities. Their money is sitting somewhere. Of course, it's not lost, but you see, you cannot then trade as you wish.
Yeah.
So that's why I'm asking more about how AIB is. How safe is it? I know nothing is. What is the risk of AIB?
Okay, I think the reason why CMA introduced the minimum required capital that time, I think there was other brokers who went down that time, and they were majorly affected by what happened in the market around 2007, 2008. Safaricom IPO, most of them, they were forced to reimburse clients from their own pocket. As they wait to be paid by Safaricom, which the Safaricom have never done. These brokers, they are relying on this capital. That's why they went under. After that, CMA came up with very stringent measures to make sure no broker can go down. Like now, what you have seen, most of brokers these days, what they do, they either merge or they are bought out. So if there's any issue, they are bought out, another person comes, puts in the capital, and it continues operating. So as of current market operations, you are fully protected. Fully protected. You don't need to worry about your investments. For AIB Capital, it's only that AIB Access, it's only that I can't give you the figures right now. You can get them on our website, our financials. You can see even our balance sheet, the way it is. The company is strong. And as a client, again, these days you don't need to worry. It's because those times the CDSC didn't have procedures of transfer. And that time there was so much fraud in the market. These days you only need to write to CDSC, they transfer. And before they even suspend a broker, they usually allow maybe a bank or an established fund manager to act as a receiver. During that time, as administrator, when they are handling, they are the ones now who will be transferring the shares. So right now, I think for AIB, you don't need to be worried. In terms of performance in the market, AIB have been at the top. And I don't want to talk for AIB alone. Even other brokers, I know most of them, they are good in the market. I have not seen any broker who have shown any signs of collapsing. And if that happens, CMA will actually tell you in advance. Because we usually do quarterly reporting. So by that time, as a client, you already have known. Then, if you find you're getting hard time, a broker paying you, and not just one individual, you see complaints where people have complained such that even CMA have raised that issue. That time you know that broker is headed in the red. But as long as brokers are reporting, you can always tell. Their financials will tell you. So for now, you don't need to be worried about shares. You are fully protected by CMA, NSE, and CDSC. There is also a question on the chat. I was opening a DOS CDS account and my number was unable to be validated. What might be the problem? And what can I do? Am I not in the country currently? Maybe what you can do for this one, because of time, you can join tomorrow. We do it practically. Then you should be able to go through the whole process. Only that time is not is against us right now. We are ready for 30. We will go through the whole process. So for those who wanted to open account, let's do it tomorrow. There was another question you can ask. Oh, before we go to your question, PM, there is a question. Is AIB selling shares as well? AIB is also an investor. They are not selling. They are not selling. Let me clarify that. I know maybe in our financials you saw we have sold. We sold last year, not now. And it's because what we are selling, is AIB shares that were bought a long time ago. As a broker, we are not allowed to hold shares in our dealing book. We don't have dealing desk. That's why they have been forced to offload. But currently, we are not. That is based on last year's performance. Do you also do personal guidance? Yes, just reach out on my WhatsApp. I'm happy to help you, Porian. PM, you can proceed to ask your question.
Okay, I'm back once again.
Okay.
About the guidance about my portfolio, there is a time you taught us that at least you are supposed to own not more than three stocks. Now I'm making a big paper loss because of having 7 different stocks.
Okay.
Now I want to own like two stocks, dividends and growing stock, and one intraday. Among these stocks I'm owning, what will you recommend about? Because I want to drop some of the stocks so that I may remain with 2. Okay, can I read the stock I'm owning? I'm having the DTK, BAT, Equity, KPLC, Kengen, and PC, and GLD. Among those, which will you recommend that I remain with, and the rest I do away with it?
Well, that would be tricky because it depends on the price you entered on those stocks. Are you still okay? The question would be, do you still continue buying, or you just want to hold those and maybe continue accumulating dividend? Because that now will determine whether you need to trim down. If you are still investing, I wouldn't advise, because the shares you have just read, apart from KPC and GLD, the rest are very good dividend stocks.
Yes.
What you can do, you can share on my WhatsApp, we go through it. Ideally, in terms of portfolio, it depends on the amount. That's why I ask whether you are continuing investing. If you're just deciding I'm putting 500,000 once and you don't buy again, then that is the time you limit yourself to 2 or 3 stocks, because you don't want again to spread that amount on many stocks. If let's say you are putting 50,000 every month, you can decide to first grow 3 to a certain level, then the rest you start building now slowly, later adding 1 at a time. Now in your case, you may have bought so many different stocks, the 7 of them differently, which is not wrong. It's only that the market have dropped. What you can do, because the market will recover, wait for the market to recover, see where there is a profit. That time you can decide to offload. Though I would not advise on dropping the stocks if you still want to buy more. If you still need to add more, you can pick just 2 of them without offloading the others. Just pick 2 of them, build up to a certain level, let's say 1,000 each. See the portfolio the way it is for that time, see the dividends the way they are flowing. Pick another 2, build. If you came in when I was starting the presentation, I said in terms of portfolio building, it depends on your frequency of investing. If you're just putting a lump sum, you don't want to distribute that again among many stocks. If you're investing monthly, just take a few, build to a certain level before adding others. What you can do, just pick my number. I hope you had reached on my WhatsApp, if I'm not wrong.
Yes.
Let's pick it up on WhatsApp, because the way the market have dropped, you don't need to panic. First of all, don't panic, because once you panic, you end up selling at a loss. Let the market recover next week or next week, but when we are in April, I believe we have a holiday Friday and Monday, so you may not see much of improvement this week, but come April, the markets may recover very well. That time now you can decide what to offload. But I wouldn't advise on offloading, because these are stocks which have declared dividend, some of them. If you look at Kengen is the best from BAT in terms of dividend yield. It gives, yes, small dividend, but its price is low. So the number of shares you can buy in Kengen can give very good dividend. So Kengen is one I can't advise on selling. Equity Bank, if you look at it, they have done a split before. Nothing stops them from doing a split or even a bonus soon. If you look at BAT, it's one of the best dividend stock. GLD, that one is for capital gains, purely capital gains. The others, we may need to review the prices next week, but don't sell shares at all. It's better you leave them there, let them continue giving dividend. If you plan on adding more, then add on the shares that you just pick. If you pick, you have, let's say, BAT, Kengen, and maybe GLD. You can decide to first build those to a substantial number. In terms of shares showing red, actually never be worried. Market will always recover. When it is red, it is time to add more. Add more, but also base it on company performance. Don't add shares on a company that is not performing well.
Okay. Thank you.
Okay. There is another question. You have mentioned on your brokers app, you can be able to tell when foreigners are selling. According to your analysis, do you feel most foreigners have fully sold? Not all. Just go to any broker, online portal, not on the app. Online portal. Foreigners, they sell and buy back. It's only that the net position between their buy and sell, you find they have sold more. But then that is the same money they roll back to other shares. If you want to know foreigners have left, look at CBK. They will even complain because then there would be outward flow of money from CBK. Because then foreigners, you are paying them either in dollar or euro. And you see it affecting either of them. Right now, what they usually do, they sell, hold, wait for the market to go down, buy back. Remember, foreigners, they invest on two things: dividend yield or profit percentage. They compare the two. Whichever is higher is what they take. If a company have announced dividend and maybe they have made a profit of 100 plus percentage and dividend yield is around 10, they would go for sale. So they will sell, buy back at a different price or go to another stock. Any other question? So for CBK, in terms of account opening, let's go through it tomorrow because of time. I'll go through the whole process, account opening, then guide you on account approval process. Then if I'm able to get my previous account, I should be able to show you now where you go for bids. When you're bidding on primary market, because that's the most important, where you're not involving a broker, it is you applying for that board directly. If you are selling on secondary market, then that requires a broker. I'll give you the details. You only need to talk to a board dealer. They give you a price. If you're willing to buy, you take over the board. So that goes through a broker. Is NCBA stock still a good buy? NCBA, let me see the price. It is recovering. There is information that is not clear about NCBA in terms of dividend. Once it is sold to Netbank, Netbank is an international bank, they may decide to change a registrar, meaning their dividend may be paid in a foreign currency. Will we be treated the same way as BKG Group treats us? Are we foreigners? You see, now we are subjected to a different withholding tax. So that information is not yet clear. What happens to their dividend in terms of payments? Because that will affect the amount that you receive. Then secondly, in terms of their reporting, will they still continue reporting as a Kenyan entity, or they now start reporting in international format? Because then that also affects their valuation. No? Then the third thing is we have seen rumors Standard Bank is the one buying NCBA, but then the story change is Netbank buying shares in Standard Bank buying shares in Netbank, Netbank now buying shares in NCBA. There is a third party that is coming in as a ownership, Standard Bank. they own in Nedbank. Will they have a full control of NCBA? Then, finally, is regulatory approval. It has not been granted. We have not seen the regulator comment on it. Once that is done, then that time we can say NCBA is a good long term. For now, I'd advise on dividend, because they pay good dividend, and also capital gains. If you notice, it is trading around, though the upside may be small in terms of gains. It's around 87, 89. That's why it has been playing on Friday. Highest has been around 98. So around a difference of around, give it a benefit of doubt, 10 shillings. With what have been put on offer, they have said their shares that they will pay at a price of around 105. People anticipate the price will go up to that level. Once that is confirmed, expect the price to rally up. So for NCBA, maybe for price gain, as you wait for full confirmation, because we don't know the ownership and whether there is anything that will change. But by the end of April, we should know regulators' position. They can't hold for a very long time. Between KCB and Co-op Bank, what would you recommend as a buy? First of all, it depends on the amount you are putting in, because KCB is at 69, Co-op is at 28. So for Co-op, you can buy a lot of shares, but then dividend is small. KCB, you can buy a lot of shares, but again, dividend may not be that much. In terms of price gain, KCB, it still have a potential. You know, they compete with equity. Price have gone to the highest of around 80, so there is a possibility of 10. Hope can't rise with that. Hope, I don't think it can do that. Maybe in near future. Co-op, you are playing around with 27 against 30, around 3. I would advise on KCB. When it recovers, you can take your profit. Again, it has good dividend. I don't think there is need of selling. KCB is also a good counter for long term. Again, what I said, equity have done splits before. KCB, I believe they can also be a candidate if this price continues to go up or they start giving bonuses. So for me, I would go for KCB because dividend is good. Also, price difference from the drop we have seen, there is still good potential. But again, it also depends on the amount you're putting in. Because again, you don't want to buy KCB with small amount, then you get a small dividend, while you can still buy Co-op and gain in terms of dividend. Any other question? So tomorrow we meet for international stocks, then boards. We start with boards, we open a CBK account, then we go to international markets. We see how you can buy shares on Scope and also Interactive Broker. Then there is a very huge opportunity in international markets. If you're able to get access to international markets, the better. There is a very huge opportunity because you are playing with price movement and also dollar. So always look for the reason why I prefer Interactive Broker, because there you are assured you are paying them in dollar, they will pay you back in dollar converted into Kenya shillings. You can play around. Scope market, it is a local one. So even if you are loading in Kenya shillings, they will pay back in Kenya shillings. In terms of conversion, that's where I need to confirm, because then if you're not gaining the dollars conversion, then it means you can only make money through capital gains. International markets, dividends, I wouldn't advise. It's purely capital gains, then dollar conversion. Any other question? I don't want to block any question. And remember, this was last Saturday, and this Saturday it was purely more of a beginner series. So next Saturday now we go back to our usual training, where now we digest one topic in full. We'll go through valuations and how to build now portfolio so that you know how to build portfolio and rebalance your portfolio. That's something you can do on your own if you understand how dividend work, how capital gains work, because you have all that, and in terms of which shares to buy and target. If there is no other question, I'll give 2 more minutes. If there is any question, put on the chat or you can ask. And remember, Safaricom, you still have an opportunity before that deal goes through. Safaricom, there is a very huge opportunity for those who want to earn through capital gains. Also take advantage of the drop in the market for last week. If it continues to drop again, it opens even more opportunities. Buy low, sell high. Remember that.
How do we join the call for tomorrow?
I'll share the link. I'll still share on the platforms I shared. That is on my WhatsApp groups and channel. Also on my YouTube and also other social media accounts. I'll share that link tonight. Alternatively, I can use the same link. Let me see. Yeah, I can still use the same link. I think let's join through the same link so that it doesn't make create confusion. I'll use the same link. I'll just edit the title. So with that, I think we can call it a day. Thank you so much for coming. And these trainings will still continue. At one point, we may even start training during working hours so that we execute trades on real time. So thank you so much. And you can reach out on that WhatsApp number. And you're free to support the free trainings. That's my person number. It is optional. Trainings still remain free. So let's meet next time. Thank you so much.
Thank you so much.
Welcome. So we can drop from the call.